we can and figure out how to come out on top when the whole thing shakes out. So that's something that I'm hoping is going to be brought up. I'm very curious about some of our borrower clients and our other real estate investor friends and how they're finding deals, because, you know, like when there's blood in the streets, like there's deals to be had. And I'm curious to hear what people are going to say about that. Like, we know Mike Schock, who's going to be on later, I think he said he put JD said he put 3 houses under contract this week.
Yep.
That is great news. And people who are proactive, obviously while being safe, people who are proactive during this difficult time are going to come out ahead, right? I think that's an important part of the message for today's call. Yeah, so I'm going to jump back in a little bit later because we're going to be doing some interviews with some industry folks, but I'm going to pass it over to Ian Horwitz. Ian, you want to jump in and give some of your perspective and keep it moving along?
Sure, absolutely. For those that don't know me, I'm Ian from Equity Warehouse. Our primary business is doing rental properties. We have 134 units, 100 of them here locally in Baltimore. We have 34 units out in West Virginia. With that being said, you know, what we're seeing from the rental market, sure, there's a little pause on people moving, you know, move-ins, move-outs. But in the grand scheme of things, you know, when you buy rental real estate, you buy it for a reason, right? Like, we bought it for a retirement plan. And for us, when we're buying them, you know, we make sure that we're buying in the, you know, the value that works for us and making sure that we have a nice straight line, steady income, gradual increases. So at times like this, when the market's jumping up and down, it actually works out better for us because we have that nice flat line, slow, nice growth. And in times like this, we're still producing income. A lot of what we do in the single family space is subsidized housing. I know a lot of people have been asking questions in regards to, you know, is the Housing Choice Voucher Program going to continue to make payments? Are they still going to, you know, issue new vouchers? Ben Carson came on one of President Trump's speeches or rundowns to say that everything's still status quo with the program. Payments are still expected to go out. Now, each individual housing authority seem to have made their own adaptations to what they're doing and not doing in the ways of inspections, being able to go to the office to fill out new vouchers. You know, they're still there for emergency inspections and emergency cases, but it's actually, I hate to say it, but it's actually nice to see, you know, real estate's been a very antiquated market for, you know, when it comes to the digital aspect for a very long period of time. So with that being said, it's nice to see that some of the public housing authority agencies like Baltimore City, being able to take stuff digitally, taking new vouchers digitally, or handling problems from afar rather than, you know, going out and having to jump through major hoops. So those things are nice to see. You know, what does the future hold? You know, nobody knows. If we knew, we'd all be sitting on the beach and we'd be doing this meeting, you know, from the Virgin Islands, right? But what do we see is, you know, make sure you're buying your properties right. You know, we're going into this mini crash, or whatever you may want to call it, buying a 76-unit apartment building. But we know we're stable and we're good with it because when we underwrote it, you know, being conservative and understanding that the market's not always going to be at the tip top and it's not always going to be absolutely perfect. So it's nice, you know, this dip has really made us go through and, you know, look at our own business and make sure that we're doing things right. And it's good to see that when we did that, it worked out for us that we underwrote that building right. Or another thing that we're seeing, a lot of small businesses, you know, not just in real estate, but, you know, restaurants and service providers and everything else is, you know, I think is making a lot of people look at their liquidity requirements. So, you know, days like today really make you think about how much cash you have on hand. Is leverage always the right thing? I think Mike Wagner, that's jumping on later, Terry will be interviewing him. Me and him went round and round at a mastermind event about debt versus no debt, and I was Mr. Debt. He was Mr. No Debt. And, you know, days like today, it kind of makes you think, you know, maybe no debt is the right way to go. Or maybe, you know, not having as much leverage is not always the best way possible. So it's good to have this, and it makes, you know, it's good to have a little gut check. I think I want to keep it moving and pass it on over to Terry Roy so we can come back and revisit some of these topics.
Yeah, thanks for that insight, Ian. As far as what we're still seeing a lot of activity. I think I went into it a little bit yesterday with Balin on a call, and I just got a message a couple minutes ago from one of my sales guy said we got a signed contract back from a buyer, and we've got a couple closings set up for this week. So we're still seeing activity. We're definitely seeing some investors have, for obvious reasons, level of uncertainty, and some of their lenders are, changing their lending criteria. And I think that underlines the importance in any market of having a lot of different relationships and not relying on, one strategy, one lender, whatever it may be, and just having a lot of different angles. And that's, over the last couple of years, we've built a rental portfolio. A lot of people think of us as just wholesalers because they see a lot of our marketing, but we do flips. We have a sizable rental portfolio, and it kind of gives us a lot of different streams of income, which have been helpful in up times and down times. So I think it's going to be good. It's going to be a little unstable for some people, but I think long term it's going to be good. I think a lot of people that don't really know what they're doing are going to get shook out of the market, which is going to be really good for a lot of the people that have legitimate businesses, strategies, and are well capitalized for what's going on. So, as uncomfortable as it may be for a week, a month, or a couple of months, or whatever time period, I'm kind of excited about what this is going to bring over a longer period of time for a lot of us. I think Ian and I were talking about that a little bit today on the call.
Terry,
Yeah.
What are you seeing related to kind of on the auction home front? We talked about this on our Facebook Live. We did, but I'm assuming a lot of people didn't hear that. What's the rundown? Are auctions still happening? Online and offline auctions, are they still happening? Obviously, with actions with what's going on with courthouses right now. What's kind of some insight from that?
Yeah, we the auctions, the in-person auctions, from what I can see, are all halted right now, but the online auctions are still happening. So, it'll be interesting to see as far as foreclosure auctions, what that brings for a period of time with some of the things the government's proposing as far as staying foreclosures or offering some sort of forbearance or forgiveness. So, all that's up in the air. And again, I know it's uncertain for a lot of people. I think it's uncertain for everybody what's going on, but I think it's going to be really good for the serious investors who have been in the market for a while and are here to stay and have good strategies, good capital, and good teams around them. So.
Got it. What does a company like you do when you're somewhat reliant on buying a lot of auction properties? Like, that was a strategy, right? To buy properties. Like, what are you guys doing in the meantime? Are you on hold, or have you gone other ways to find deals?
Yeah, I mean, last year we did a sizable amount of deals through traditional ways, whether they were referrals, direct to seller, stuff like that. So we kind of wound that down at the end of last year just because we had some personnel that moved around. But we're looking at putting that back in play. I mean, I think that, a lot of people, I know a lot of big operations, which I don't want to put anybody out there, but just people that regionally are pretty big that have completely put a halt on their marketing, from what I understand. And while I understand that's a defensive play, I think it's a good time, as you said yesterday, to kind of go all in on the strategies that work and that you've had success with over time. So for us right now, it's just a matter of kind of putting all that back in place, which I'm hoping we have that stuff in place by next weekend. Just following up with old leads. A lot of people that may not have accepted an offer, that you gave them 3, 4, 6 months ago, they might be a little shook up too and be more willing to accept some offers that weren't in their ballpark before, but they might have a different set of circumstances going on right now. So, I mean, that's the play that we're getting ready to do, is just follow up on all our old leads and see where those sellers are at. And I think a lot of people just kind of say, oh, well, that one didn't work out. And, a lot of investors just don't have good follow-up systems.
Yeah. One interesting point that our business partner in Philadelphia, Ian Walsh, made, and that you guys both echoed just in your own perspectives, is a situation like this acts like one big stress test on your business, right? Like, how well are you set up for a downturn? Or, even some kind of like pause in business. And that has a lot to do with what you guys were saying about capital on hand, the amount of leverage versus not, the systems that are in place, how well you can work remotely, the relationships with your investors and clients and stuff like that. Like, it all gets tested, right? And the people who are set up properly, and I'm not saying it's easy for anybody, but the people who are set up the best are going to come out ahead. And I think that's what happened in the financial crisis years ago too, is that the people who could weather the storm. And also this is similar to something that Mike McCann, an agent in really big real estate agent in Philadelphia, said on an interview one time that we did with him, that he would increase his ad spend during every downturn because he knew he could afford it, and he knew he was going to acquire more market share that way, and he comes out ahead every time. And that's not to say that those downturns are easy, but if you're set up, you can capitalize on it. So I think everyone's kind of echoing that same thing just from their own perspectives, which is, yeah, it's something to be aware of, learn from for the future. And hopefully people are set up well enough today that they too are going to come out of this ahead in the next few months.
And I think another point that you're bringing up, not only just for the experienced investors, including all of us, is that sure, it makes you look at your business. It's also kind of like a nice little, it's like everybody's at pause. It's not like the financial crisis of '08 or, 9/11, or maybe 9/11 is a little different, but everybody's on pause. So it kind of gives you a chance to go back and regroup. And it's not like one person's getting ahead of you while you're regrouping, right? Like, it gives a chance for everybody to get their affairs in order. The other cool thing, and I think, I know I was talking to Kate Matthew earlier about it, who's jumping up later, is that now is a great time if you're new in the industry, whether you want to be a realtor, an investor, a lender, a wholesaler. Now is a great time. Put your head down, do your teleworking at home, and go out and get your stuff in order and go. I mean, I think some of the biggest companies are founded during downturns. So use this time, this downtime that everybody's saying, oh, I'm home and I'm just doing nothing, I'm quarantined. If you have the availability, go and put your head down and use this time to get your stuff in order and get out there, start marketing, get your realtor class done. But, start underwriting investment properties, especially now, because it allows you to look at what it was just a few weeks ago to now. You don't have to go back to '08 and compare. You can literally look at, what you see difference-wise now. So,
yeah, and I'll if you didn't see Mark H's, I don't know. Sorry, Mark H. I don't know your last name, but anyways, his comment that he just posted. But he said, I hit a lead up 8 months ago, same offer from them, and got it under contract last week. So he had an offer on the table for somebody eight months ago. They turned it down. They wanted something better, and then he followed up with them and he got under contract and is wholesaling it, is signing it and wholesaling it. So that's how it works. And we're seeing the same type of stuff on stuff that we're lending on. Someone might not have wanted to go with our offer, and then they decided to go with it just based on supply and demand. So now I feel is a great time to go all in. I mean, the one unknown thing with all of this is, and we're going to talk about this shortly with a few other parties when they hop on, is consumer confidence. And where is consumer confidence right now? Are people nervous about what they see in the marketplace, and is that stopping buying and selling? And I don't necessarily think it will be. I think there's going to be a lot of parties that are unsure, so they kind of want to stay out of the game for now. But I'm willing to bet that there's going to be sellers that need to sell, or have to unload a property, and they're willing to kind of take whatever the ongoing, the current market terms are for it. So it could be an opportunity. So, again, on the other side, there is some risks. I know. Listen, I'm all about being proactive and optimistic, but I do also understand the risks that go with this. And there's a risk that one day a title insurer, one of the big title insurance companies, comes in and says, hey, we don't want to underwrite right now. We're not issuing title insurance. And then the next one falls, and the next one falls, and the next one falls, and puts everything on hold. I think in general, that probably won't happen. I think the real estate market tanking or crashing or having some major disturbance is not what many higher ups want to see happen. So I'm guessing that probably won't happen, but it could. And, it's one thing if things are on halt related to, potentially getting permits, getting inspections, delays and things like that. That's part of it. But, potentially things can could go way sideways, a lot more sideways. Obviously, interest rates are still lower. RJ Breeden recently just put a property of ours under contract that he was working on, and we got an above market offer on it because it was a first time home buyer. They wanted to lock in on a cheap interest rate, and they wanted to, and they're able to close in 30 days. In 30 days from now, are they definitely going to close on it? I hope so. If there's other issues that potentially come up between now and there, but it gave us confidence knowing that there's first-time home buyers out there that want to capitalize on a cheap interest rate and purchase a property. So I was happy to see that. And it seems like a lot of people I'm talking about, I've been talking through, are looking at optimistic times, optimistically. So I think it's just important to understand that obviously, you got to be safe and you got to be smart. And there's also a real potential case that you buy a property today for $100,000 and it's worth $90,000 tomorrow. Like that could happen. And you got to have some sort of game plan in place if that does happen. And it could be worth $80,000. Who knows? Or maybe it's worth $110,000. And I think in general, some rentals are really going to be attractive to people because if Ian, for instance, buys a house today for $100,000 and puts a tenant in there paying $1,000 a month, and tomorrow it's worth $90,000, what do you care? What do you care if you lose $10,000 in fake equity overnight on a property that you're holding as a long-term play?
Well, I think that's a very valid point there that, again, that goes back to our business model. And I think this goes back to everything that we've been discussing is it really makes you look at what your business model is and, how you're going to conduct business and so on and so forth. Same with Terry and wholesaling, what's he putting the houses under contract? Does he need to predict these types of these downturns if it's possible to even predict? To go back to consumer confidence, I'd love to hear from some of the realtors that are jumping on. I think the big question is there a lot of pent-up demand? There's always going to be a space for people flipping houses. There's always going to be a space for renting properties. The question is, what's that pent-up demand and consumer confidence? I think I saw a question that would be good for Chris. Dominic Praviti was saying, Chris, has hard money bankers changed any of their lending criteria during this, what's going on right now?
I think Jay can probably explain in better detail, being his side of the business. But obviously we have to be careful. We have to be more conservative than normal. We don't know if we're going to see a drop in prices. We don't know, when it comes to construction jobs, how effectively people are going to be able to execute on those, especially big ones. Jay can probably put a little more color on that. But definitely one thing that has been happening recently is that we've been doing bridge loans on properties that people already own. Maybe they need to access some kind of cash to keep their business moving, something like that. And we've been able to step in and provide that. So maybe Jay can talk about some of the acquisition stuff in a little more detail.
Yeah, we're trying to be more conservative, just like everyone else is. I mean, you as someone who's buying a property that maybe yesterday or last week you would have paid 100, you might only want to try to pay 90 or 80 for it today. And that's the same thing that we're doing. Same situation. We're lowering our exposure a little bit to be safe, and kind of going from there. Our clients are bringing a little bit more cash into the deals, have a little bit more on the table. There was a long time that a lot of private capital was out there at 100% LTV, with very little cash out of pocket from investors. And, I think in general, we are going to have probably a little bit more cash out of pocket from our clients. And at the same time, make sure they have the ability to do so. I think big construction projects right now in an unknown time are maybe a little bit scary. If you're doing a fix and flip, I think maybe, somewhat of a smaller project, might be a little bit safer. And again, obviously this whole game is risk versus reward, right? As far as I know, someone could do a full, new 6-unit condo conversion and make a killing on it. But, I would just say we're being a little bit more cautious, just like I think every buyer out there. One other note to share, and then I'm going to hop on with, we're going to bring Amin on from Universal Title, attorney from Universal Title. But, related to some consumer confidence, and Terry and I spoke about this as well. So we had a property that we had, that we were selling to an investor, and they backed out of it the day of closing. They got nervous and they forgot their deposit. So we kept their deposit. They had put it under contract 2 weeks ago, and then last week, they backed out the day of closing because title work, and actually Amin did the title work on that as well. So, but I didn't fault them on it. They got nervous and they were like, listen, I'm concerned right now. I'm not 100% sure. And so be it. But then at the same time, that project I was just talking about that RJ put under contract for us, that happened that same day. So, some people are optimistic and proactive, and some people are, hey, I just want to play the waiting game. So, all right, I'm going to unmute Amin from Universal Title. Hang on one sec. Amin, I just let you start your video. So if you can start your video, there you go. You have the name Erica.
Hey.
You have the name Erica, even though
I know. I left my laptop at home, so
that's all good.
Trust me.
That's all good. So the reason we felt Amin would be a good kind of first guest on this is he's really on the front lines of a lot of things. All of us are buying and selling and working with sellers, working with buyers, working with contractors and things like that. But as a closing attorney and seeing what's going on with closings and title insurance, that's really intriguing. And we've been in touch a lot over the last few days, last 2 weeks, actually, I would say. What are you seeing right now as far as what's going on with the market? Are you closing transactions, things like that?
So we started following this thing and how it would affect us probably 3 weeks ago. So the first week of March, when it started hitting Seattle, we just knew it was a matter of time before it was going to make it our way and it would affect us. So instead of most title companies and most businesses thinking about maybe being on a defensive a little bit, cutting back on a little bit of a leverages, we went on the offensive on this thing, and we started talking to our underwriters, to people at the courthouses, trying to figure out what we can do to continue business, but also use it as an opportunity, to be honest. I wasn't around in the title business in 2008. Our principals were, so they learned a few lessons there, and they realized the quicker they can get ahead on this curve, the better we're going to be situated. So what we did, we basically took our expenses and anything that was unnecessary or something that we could leverage out to future in the year, we cut those. We cut them to the floor. So marketing from our end, I don't want to speak about your end because I'm not sure how it works, but from marketing from our end, our ROI is essentially, if I spend $1, I want $4 to come back from it. Started talking to our underwriters.
Sorry, go ahead.
So for example, if I host a first-time home buyer event, that's something that takes a lot of time to come back for me as an ROI. I have to wait for them to buy a house and then close on it and stuff like that. That's 6 months down the road. So we said, we're not going to do that. We're going to go direct marketing to the client, which for us is realtors and lenders, and then hold back on some of these events. So that's some of the stuff that we did. And then we were really concerned about how it would affect our closings, both operationally and also on the back end when we go to record these documents with the counties. So as far as the closings are concerned, we basically have divided the closings. Most of our sellers are now signing remotely with a notary and then sending the documents in. And then with buyers, we're not including the realtors anymore. So we're really limiting the number of participants to the table, which are just the signers. And a lot of our sellers are pre-signing or signing remotely away from the office. So the exposure is very nominal. We're also concerned with the demographic that's coming in as far as the age is concerned, for the protection of someone that's coming in. For example, if you're a seller and you're above 60, we're going to see if we can kind of accommodate you a different way so that you can still get your documents signed, but also not be exposed possibly on your travel here. So very cognizant about that. We disinfect after every closing the settlement room and the reception area. As far as what's happening with respect to the signing, though, we really thought we had a solution here with e-signing because the courthouses said that they will accept them, and we got really excited about it. Then, as you can imagine, between our underwriters and the lenders, mostly institutional lenders, there was a disagreement, I guess, per se. So lenders really want their main documents, so the promissory note and the mortgage, the deed of trust, to be wet signed. They really want that to be done. They're not in favor of any kind of e-signing. So our underwriters, on the other hand, on the courthouse, are willing to accept e-signing. So right now we're in that little, window where they're kind of trying to battle it out. I have reached out to some loan officers, institutional loan officers, and they're saying that their companies are working on getting some kind of a hybrid or e-signing going. But that's probably days away. And that's really the momentum is through the virus. So if we go through the curve, hopefully, and past that, I really don't think it's gonna be here anytime soon.
Hey, let's talk real quick. So let's talk about like closings as of like today type of thing. So, so when you say those institutional lenders want originals, you mean the like the deed of trust and the deeds. They want, you know, the stuff that goes on the stuff that they go on even the note too, even stuff that's not on record.
No, they want
so they want originals. So those institutions. So let's say Bank of America. Bank of America won't allow. Has this happened yet? Or like as of today, let's say I'm just a homeowner and I refinance my house with Bank of America. Bank of America is requiring you. I cannot digital sign it. I have to do it regularly.
No, and we thought we had a solution on the seller side. We could at least get the seller side done electronically. I actually had a 1 p.m. e-signing scheduled today before I found out that the lender shut it down. I was going to have the seller e-sign their documents, including the deed, have it notarized, and then we could upload that electronically to the land records and get the deed recorded. And the lender basically said no to that. So the reason being, interestingly, is so every time there's a shift, and this is a huge shift, there's opportunity for, I don't want to say fraud, but for misbehavior. And their concern is that some of these online notary firms that are popping up or extending their services to do closings have questionable notary practices. So if we get that deed signed and notarized electronically, we get that deed on the record,
I understand.
You ensure that policy with an exception that this is electronically being confirmed, that the lender's protection isn't as strong as say that they came up to Amin's office, he notarized it, or someone else notarized it with a seal on it, and that gets recorded. So they're very concerned about that, and they have not, left their insecurities on that. So we basically have to do the same thing now. We either send everything, they get a wet sign and notarized and sent back to us, or they have to come to an office to get a signed and notarized. So that really put a stop on something that we thought we had a solution for.
Yeah, but I guess the one thing is you guys are, I mean, every title company in Maryland open? I mean, I don't want to talk about all these states.
Yeah. We're open.
Or I guess all the title companies?
Yeah. So it's funny. They're interpreting it as most title companies, because we want to stay open in business. We're interpreting as we're connecting the financial sector to the consumer. So a lender, so hard money bankers couldn't just deposit money into a borrower's account for a closing. It has to come through an escrow account. And to do that, we have to be in business and we have to conduct the closing. So we're a natural link that has to be there for the financial services to continue with respect to real estate.
Gotcha.
I will tell you a couple of things, how it's affected us with respect to recordings. I feel like, as far as I know about your business, you have a lot of Baltimore City investors. Be ready to have some extended settlements, in the sense of getting the lien sheets back in time. As late as it already was, 5 to 7 business days, you're looking at probably another 2 to 3 days on that. And then the recordings on the back end, everything's getting mailed in. They're no longer doing walk-ins. So everything has to
That's just city though, right?
That's just Baltimore City, because Baltimore City doesn't do e-recordings. Some of the other jurisdictions are still obviously doing e-recordings. Some are open. Typically, if you get more south, they're still open to drop-offs. And some have left mailboxes where you can drop off the documents.
Got it.
But yeah, we're open. We're very aggressive about this. And I will tell you guys this. I don't know if it was because of Russia files coming in and it was just meant to be, but we just had our best month of opens and we haven't even finished the month yet. So we're really excited about where this is going. And we see it truly as an opportunity to kind of step in and take market share.
Got it. What else do you think you should add that would be helpful for people, either investors that think or trying to push a deal to close quickly, or just that could prevent them from doing a deal at all? I know when we talked, we had a foreclosure property we were selling, and the reason that you were able to help us out with it is because we had all the foreclosure docs and you didn't have to do research on it.
Yeah, that's a good point. So depending on accessibility, so right now our abstractors are very limited to what they can do. One, to be honest, they technically themselves are not essential businesses. So everything they can do is remotely and online, whereas they used to be able to walk into the courthouse and get lien copies and stuff like that. So from what I'm hearing from my abstractors is typically if you're doing an investment deal, it's out of a foreclosure or REO, they usually carry some kind of judgment or lien. Or even the foreclosure case, they're not able to get those, at least from what I'm hearing from them. So we basically have to work around it or wait and get underwriter approval on it until we get the lien. So it's becoming a challenge trying to close some of these deals unless we were lucky to get the abstract soon enough. So if I get a new file now that has a lien on it, and if I can't get the lien copy, the only way I can move forward is if my underwriter approves it and lets me proceed.
Got it. Okay. So, I mean, I guess it seems to me that, it's business as usual. Things are going to be slower potentially. And that's just Maryland. You don't know any other states besides Maryland, right?
DC and Virginia.
No. But I'm saying if is DC following the same stuff?
Yeah, they're open there.
What about Virginia?
Yeah, Virginia's open too. They closed a couple of courthouses. But what they're doing, so Virginia's a different state. So Maryland's a wet settlement state, which means that we have to fund and cut checks the same day we close the transaction. Virginia's the opposite. They close, they record, and then they disperse. So they have that leverage of saying, all right, we're not going to do anything until this gets in the courthouse. But because some of those counties have closed their courthouses, there is an indemnity affidavit that our underwriter is willing to have signed and move forward. In that case, the lender, assuming there is one, the buyers and the sellers, they sign that affidavit, and using that affidavit, we can disperse the same day and then record at some point when the courthouse opens up. So it actually benefits Virginia in the sense that they disperse faster, but the recording is delayed until the first.
Got it. Ian, of course you coughed and you got put on camera.
Oh man, put him on mute.
I'm gonna unmute you. You got something? You got something for Amin, or you want me to?
No, I just saw one of the questions while we're waiting for Ryan to jump on that somebody was talking about notarize.com. Is that a valid source as a notary for you guys to process title?
They're all, in our eyes, they're all valid. There isn't a single one that our underwriter has basically said it's on our blacklist or anything like that. Their concern is that it's just a matter of time before it comes out. So they all provide different systems. So like a company like DocuSign, they're like electronic signing, but they don't do notary stuff. There are companies that do all of them. They do DocuSign versions, they do notary versions, and all that stuff. So their concern is not so much now and what they can find out now, but like a year down the road when that title policy needs to be reissued, or the person is selling it and that next title underwriter questions it because of what's transpired within the next year and some fraud that may have come out, that title policy is basically not worth the paper it's written on because they're going to put an exception on it. And then the client, they were exposed, I guess the underwriter is exposed to some liability in the sense that, we've insured these transactions, we've gotten all these exceptions, but now the title policy is issued. So it's more future and what they've seen through the last financial crisis of all the, some bad activity that could happen. So they're pretty much putting a stop on that.
Cool. Well, I appreciate it. I mean,
yeah, no problem.
I know you got a closing going through. So, hey, also one thing, just so everybody knows, I'm going to put a link out here shortly, and you'll be able to get access to everybody who speaks contact information. So, but it means with Universal Title, and we appreciate you coming on, and I'm going to be sharing everyone's contact information shortly. So, man, I appreciate it.
Thank you, guys. Stay safe. Have a great day.
Have fun.
Bye-bye.
All right, Ryan, I got to unmute you real quick. I think you're Ryan MacBook.
Yeah, I've been trying to sign on here for the past 5 minutes. And
yeah, all good. Ian,
how are you guys doing?
Good. How are you?
All right, we're gonna try to do something with Ryan Murphy here. He's at work. He works for the fire department. So if he runs away, it's not because he's scared. It's because he has a fire. I work with him in the fire department. So let's get this done. Ryan, you just want to quick introduce yourself and what you do?
Sure. My name's Ryan Murphy. I've been flipping houses for about 3+ years now. Like I said, I started out doing wholesale deals with Ian and Dan a long, long time ago. Let's see, we've done a lot in the city, a few in the county. I'm trying to think what else. Buy and holds as well. Probably around 50 deals. So we also shot a pilot for HGTV, which turned out to be a huge pain in the ass. So if anybody gets that opportunity, I wouldn't recommend it. Other than that, right now I'm just out flipping houses, doing high-end flips. Well, I guess middle of the road flips compared to some guys.
Ryan, you still flipping in the Patterson Park neighborhood? I know you really like that neighborhood, and if you are, I just wanted to see what you thought about with what's going on right now. How much do you think it's going to affect by being in like a super niche market and targeting a super, like a certain area? Do you see yourself diversifying more out of all this, or do you like to, or do you going to continue to just work what you're comfortable with?
So I really like the Patterson Park, north of the park neighborhood. I know that's a smaller, you could say it's 2 blocks deep. You go 1 block from the park and then into the 100 block north. That's where you get the most, the highest return or the higher ARV when you're done flipping the house. But I've been a little conservative because the prices up there jumped up faster than the resale values, at least in my opinion, for what I was able to get for them. We did push the limits on some stuff and get some of the highest comps in the blocks that we were doing at the time, but it seems like it's cooled off a little bit. So I am still actively marketing that area and looking for deals there, but I'm a little bit more conservative on my purchase price. And then with that, I'm also targeting more of buy and holds now, because it seems like the market has cooled off a little bit overall. And then with the recent financial downturn over the last few weeks, I pretty much have gotten really, really conservative because I don't know how this is all going to shake out.
Right. So in the short term, do you see yourself wholesaling more deals, or do you see yourself fix and flip? Like, what coming out of all this, what's your business look like over the next few weeks, few months?
Over the next few months, over the next few weeks, I'm probably just going to sit tight and get my marketing out, because I feel like this is going to present a lot of opportunities for people, but I don't want to jump in too soon if this drags out longer than we all anticipate. Over the next few months, I would like to add a few more buy and holds, just get in some, middle of the road neighborhoods and get some tenants in there and just get some cash flow. So that way, when all this finally clears up, I think there will be a lot of opportunities out there for guys to get some really good deals on properties.
Right. And how do you feel like, I know you work in the city a lot. How do you feel as the city market's going to fare during all this? I mean, do you see a major downturn? Do you see certain areas staying the same, especially the Patterson Park neighborhood? Do you think this is going to help cool it off for you and be able to allow you to jump back in?
Yes, I think that you're going to see some pullback in some of those like fringe neighborhoods that are kind of, get labeled up and coming. I think you're going to see some of those prices pull back. Hopefully not a whole lot. I don't want to see things come back as much as they did in like the 08 time frame. There was a lot of stuff that lost a lot of value, and some of those areas haven't even recovered. But yeah, I do see it pulling back. Like I said, I'm going to be watching it, and I think that you're going to get a lot of good deals out of those areas if you stay patient.
Yeah, I 100% agree. And I think, again, it goes back to your business model of knowing what you're buying and what works for you, right? Like, that's the most important thing. And if you're just out there firing off offers and you're doing this or you're doing that, you can end up in trouble pretty quick. Would you be comfortable sharing with what happened to you the other day with a lender?
Sure, yeah, because I feel like guys knowing this kind of stuff might help them in whatever situation they're in. So I had a house that I flipped in Canton, and I was lucky enough, I put it up for sale, and shortly after I put it up for rent as well, just to see if I could get as high a rent as I wanted. I was able to do that, and I got some really good tenants and a 2-year lease. And then I was in the process of, I was in underwriting probably about a week to 2 weeks out from closing on the loan, and the bank called me 2 days ago and said that they're suspending the loan program. So it was a cash out refi for the LLC based off of the rent and, 70 to 75% of the after repair value.
Wow. So I know I've shared a few local bank contacts with you. and someone's asking what bank, we're not going to put that out there. You can reach out to Ryan Murphy on Facebook and find him, and he can discuss offline. But I did put you in touch with a few local banks. Did they say they were still lending? I know I talked to one of them, and they said they definitely were.
Yeah, I think everybody's slammed right now with the way that the market's fluctuating. So I'm still waiting to hear back from both those guys. I'm going to follow up with them again today. I did find one lender that I had dealt with in the past, but due to the situation, they said that they were hearing that from a lot of banks. So I think they ran their rates up a little bit higher to see how desperate people are. And for this situation, this deal I'm in with the rent that I'm getting, the only thing that it does is just slow me down on funding for my next deal a little bit until I can get it all solved out.
And if you don't mind, what's your confidence in your tenants paying? I'm not sure. You don't have to say exactly what they do, but are they laid off during this, or are they still working? Have they reached out to you, say, hey, I need to delay my rent? Or
so it's kind of like a catch-22, right? You reach out to them and ask them how they're doing, and then they think, well, maybe they've got you. So I have not reached out to my tenants. They were very responsible. They had a phenomenal rental application, so I'm not too concerned. I haven't had any issues with any of my other rental properties, but I'm sure I'm not going to bat 1,000. I'm sure I'll have one or two hiccups in there, but it's like I said, it's all wait and see. I mean, really, hopefully things get back on track soon, and it's nothing that we have to worry about long term.
Yeah, I agree. I know Dan was in the office the other day calculating what our rent looked like versus tenant portions versus subsidy portions to say we're good or not good. It's really making everyone look at their liquidity and what their position is. We knocked this 10 minutes out pretty fast. Do you have anything else you want to mention before we roll out and move on to Jimmy Harris?
No, I think that I would just say just be careful out there, because right now there's so much uncertainty on how things are going to go. Don't try and overextend yourself, because we're all in this for the long haul, and we're all in it to, be able to retire early, hopefully. So just be careful out there, guys.
Yeah, one day. Well, you definitely got to be careful out there. You're still at work. Hopefully it's a nice quiet night for you, brother, and I'll catch you tomorrow. Thanks, man.
All right, thanks for having me on, guys. Have a good day.
Sure, no problem. All right, so Jimmy Harris, a local builder and investor, is hopping on next. Hang on one sec. Let me figure out how to get Jimmy on. Let's see. Bear with me, Jimmy. Nope, I don't want to make you the host. I just want to let you start your video. There we go. All right, Jimmy, that should, let's see. Ask to start video. There we go. You there?
Yep, gotcha.
Perfect. Got a good little background and everything.
Working, man. I'm working. You're blowing up.
You want to answer the phone while we're all live? All right, so listen, we got Jimmy on now. We're gonna hop on. We have a little gap between him and RJ, who's on after him. So if we go over a few minutes, that's fine. And then we have RJ, real estate agent, then Scott Freitag, who's a commercial bank lender, then Mike Casey, who's an Airbnb investor, and then I'll give you the lineup after that. So Jimmy, let's start with you. So give us some insight of what you are seeing currently out there.
Well, I mean, so I guess give you a little bit of background on who we are, what we do.
Yep.
We build houses. We, still do some rehabs. We have a rental portfolio. So for us, it's, kind of like what Terry was even saying before, it's multiple streams, it's multiple things that we're doing all within the same kind of realm. But I feel like each one of those segments is different. From the standpoint of the rentals, I think it's, we're getting some you guys were just talking about, we're getting some people literally just today that said, hey, we had this month's rent. We're laid off. We're not sure what's going to happen. We just wanted to give you guys, heads up and let you know. We were trying to be proactive. We did reach out to our tenants and just said, hey, here's what we expect out of you, stay safe, stay healthy, but if you run into an issue, let us know. Cause I'd rather know than be surprised. All of a sudden, I just don't want a rent not to show up and us be guessing why it's not there. So we did that. Out of, the units that we had, we only had a handful of people that came back and said, hey, we might have an issue. kind of like what Ian was saying. I mean, it is what it is. You know, if Dan was running the numbers, we were kind of running similar numbers to see, like, you know, can we cover the debt? You know, what are our lenders doing? You know, as far as servicing our mortgage and things like that, in order to, you know, making sure, you know, you can, you know, make it happen. So, so that's on the rental side. On the, you know, on the rehab side, we actually don't have any rehabs going on right now. But I mean, to your point earlier, Jason, I think that what you're going to see is, you know, all the restrictions tightening all the way around the board. We were just doing a refi as well. We were refining about 20 of our properties. We got 8 of them through. We had another batch of 12 we were getting ready to do right now. Literally, we just got word this week that everything was being put on hold. So, you know, I mean, so that's a pretty big, you know, we were trying to actually get some cash in, you know, extra cash in the pipeline, and maybe be able to take advantage of, you know, what we think is coming down the pike.
Sure.
And, you know, they kind of stopped that dead in its tracks. So that sucked, but, you know, it was, you know, is what it is regarding that. I mean, there's, you know, I'm sure there's some local guys, that could still do some stuff. We have a little bit different criteria. You know, I don't want any arms. I only want, you know, 30-year fixed stuff, for this exact reason going down the road too. You know, I mean, if you're going through this now and, you know, say it happens again in 5 years and you have a 5-year arm and your note gets called in 5 years, you know, now you're in, you know, you're in a storm all of a sudden that could have been prevented had you locked in long-term financing. So that's something that, you know, we're trying to do to be proactive, with this is, you know, lock in long-term rates. You know, and at the end of the day, I just feel like it's, you know, it's a better way to hedge any future issues that might come down the pike. On the new home side, that's probably the scariest of all for us. You know, just because, and, you know, just to be perfectly real with it, I mean, yeah, we're still out there building. I mean, it was nice to see when Hogan came out the other day and said, hey, you know, real estate construction companies are deemed essential. I mean, I was puckering there for a little bit, to be honest with you, because, you know, when you're in these projects, I mean, you know, you lenders still want your money, you know, so, but, you know, it's a situation where we're out there still, you know, I'm not going to stop working. I'm not going to stop building. I'm not going to stop doing what we're doing. Will we run more conservative numbers? Yeah, I think so. Absolutely. I mean, that's what we have, you know, we did our marketing call with our team the other day, and that was our exact, you know, conversation was, hey, we're going to get out there. We're going to be a little bit more conservative on our numbers. We're going to, you know, run, you know, the ARV a little bit lower. So that makes our acquisition, you know, a little bit lower and things like that. But, you know, I mean, on the new home side, we're still building every day, all day. I got guys, you know, working on several different projects right now. But, you know, I think at the end of the day, I think it's, you know, I don't think that this is my opinion on it now. I don't think that you're going to see there's not a major underlying financial issue here. What you're seeing, I think, is more of a, you know, a 9/11 thing instead of a 2008 thing. You know, I think you're going to bounce back quicker than we did in 2008. I think that it's going to be a scenario where people are going to, as soon as that consumer confidence comes back, as soon as we have quote unquote flattened the curve, I think you're going to see, you know, you know, I know they just injected, you know, and passed these stimulus bills or whatever. I think you're going to see, you know, people come back in strength. I still think that you are going to see a deflated market for probably a little bit. I don't think it's going to be anything like you saw in 2008, in my opinion. But, you know, at the end of the day, I think you still have to be conservative with your numbers. You know, we're not necessarily
a wait and see type of play.
Yeah, exactly.
I mean, it's the consumer confidence thing, and that's why a lot of people, realtors, are going to give some good chime in nicely on this that we're interviewing. Yeah. But it's the wait and see, and I agree. Like, if this is all over, you know, in 60 days, you know, people will get off the sidelines.
Right, and I think they will. I think also, I know I watched when you and Terry were talking yesterday, but, you know, I think that also, I mean, and like he said earlier, I think there's two different strategies. I really do. I think you can either be conservative and say, hey, I'm sitting on the sidelines, or you can go all in and put all your chips in and say, hey, let's see what we can do over the next little bit. Do I think there's going to be opportunity? Yeah, Chris mentioned earlier, is there blood in the water? There probably will be. You know, I think that, and that's why, quite frankly, we were trying to, you know, put some more cash in our pocket to, you know, be in a position where, you know, you can go out and take advantage of that. I think it's critical to, have folks like yourself lined up to where if a deal does come down the pike for you, that you have the opportunity to take advantage of it. You don't want to go out there and all of a sudden be like, oh my gosh, I found a deal and now I'm scrambling to find, money for it.
Yeah.
I think the old adage will still remain true. If the deal makes sense, you'll find the money for it. Not a problem. But I would just encourage folks to be a little bit proactive with that. Make sure you have, your funding lined up ahead of time. Make sure that you're not sitting there scrambling at the last minute and it causes you to lose a deal that you could have wholesaled or, kept or whatever. That's something that I would, that we've done on our end. We've, tried to hit it from both sides, the cash side and the lender side, to make sure that, and we've had conversations with, several of our people and saying, hey, if I find a deal, and we use a lot of private money. But, if I find a deal, can I count on you for the money? And, everybody that we talked to said, yeah, I mean, like, I'll be there to, as long as the numbers make sense.
I think capital is always available in any marketplace on the right opportunity, on the right deal, on the right terms. I mean, if someone comes and says, hey, I'm trying to get, 100% financing on this deal at a low interest rate, yeah, that's probably not a win-win right now for both sides. But if it's a true win-win on both sides, knowing supply and demand, meaning, why would a private lender potentially give you 100% financing at a 10% coupon or 10% interest rate with no points when, there's more demand or more supply for better opportunities out there right now. So just like anything else, it's finding the right deal. And on your end, if you came to me and was like, oh, it's going to be a 20% interest rate and 10 points, you might be like, yeah, I don't need the money that bad. This deal's not going to work. So there's that meet in the middle, and then you figure out what your terms are. Can you dive in a little bit, because I think this is important, permits and inspections and code enforcement and things like that. Like if you were, because you said you're not in the middle of rehabs anymore, but you're obviously still in the middle of a bunch of new home builds.
Yeah.
Is that right? So let's say, can you go?
I mean, we're doing rehab. We're rehabbing some of our rental properties right now.
Sure.
We have, like, new acquisitions and stuff like that. So
let's talk about building permits. Like, can you go and get a building permit today?
You can. You have to. In most of the counties, the way it is, a lot of it's by appointment only. You can't just show up and walk in like you normally could. Even on inspections, like, we built a house in Annapolis recently, and we're putting a sunroom on there right now for the people that, we built it for. Anne Arundel County has, precautions in place that say we're not going into occupied dwellings for inspections. This was nice. It was an outside inspection. So they went and inspected some footings for a set of steps that we have to do off the sunroom. And they came out today, passed, everything was fine. So I think what you're seeing is, just an abundance of caution regarding that stuff. They're not going to go into somebody's house that's occupied. They're not going to allow you just to walk in the front doors and things like that. I think that that'll probably, go for a little while. I mean, I know Hogan just came out and said that they're shutting down schools through the 24th of April. To me, that kind of leads me to believe that you're going to see a lot of the other restrictions go on that long. I think that people are going to use that as the benchmark. Like, hey, if it's safe to go back to schools, it's safe to open up everything else. Possibly. I just feel like that's going to be, kind of the turning point once, if they can flatten the curve, if they can do whatever they're talking about doing and stuff like that. But then I think you're going to see the permit offices open up. I think you're going to see the different inspections and things like that open up a little bit more, because it is challenging right now. I mean, to get a hold of somebody, like I'm trying to get the electrical inspection done down there at that job, and I can't get a hold of anybody down there. So I think you're going to see that for a little while. You have a lot of people working remotely. You have, all those kinds of things going on. And I think that I think that's the new normal. I think that, for the next, month, that's what I would plan on seeing more of. So I would, again, like I was talking about before with the lenders, I would caution people to, if you do have things going on, just make sure you have your ducks in a row as far as the inspections, as far as the permits, as far as all that stuff's concerned. Because, gotcha. Especially even for you guys too, if you're waiting on draws, if somebody's waiting on a draw from hard money bankers and they can't get inspections done to get those draws, that's going to kill your cash flow.
Yeah, so that's an issue. And that's, there's a few, like it's talked about it when we started, a few higher powers related to really could put this industry at a halt. And that's one of them. If you can't, what's the point of buying a property that's heavy on construction that you're going to need permits for if you can't get a permit.
Right.
That's an issue. And same thing with title insurance, the same issue. Because someone's not going to buy it without buyer or lender's title insurance. So that's a big issue. And we're going to talk about some of the different counties in the states as well. I mean, I know, so you just know Maryland, right?
Yeah, I only do all my stuff in Maryland. Yep.
Got it. Okay, so you know Maryland. When we talked to Amin earlier, title seemed okay in Maryland, Virginia, and DC. I've got a few Pennsylvania folks coming on and New Jersey folks coming on shortly as well. So they're going to give us some insight as well. But you're right.
And something else for new construction for us too is I was talking to my supplier at 84 Lumber, and he's like, hey, Pennsylvania shut down. They get a lot of their materials out of Pennsylvania. Like, I can't get stairs for jobs right now. You know what I mean? Like, their stair manufacturer is shut down. So that's something else to consider is your supply line open and things like that. So
yeah, you know what I meant? This gas fireplace guy that I talked to yesterday said the same thing because we were missing a piece and he needed to order one. And he said, well, it comes out of Pennsylvania. I'm not sure when I'm going to be able to get it.
Yeah.
Wait, so you're saying that, so in Pennsylvania, all like lumber yards are closed?
Not all. Like,
Okay.
I can, I use, I get my cabinets out of PA. I can get those. I confirmed all that. So it's not everything, but again, it's, it's the idea of you just assume that like, oh, I can get this or I can get that or whatever. And all of a sudden it's like, you can't, and now you're stuck. That might shut your job down. So it's just, I would just encourage everybody to be, start thinking about those things and be a little bit more proactive than reactive.
Sure. Terry Royce, I see you, waiting patiently. Do you have a question for unmuted? Do you have a question for Jimmy while we're here?
No, I was just reading some of the comments in the chat. I actually do have a question for Jimmy.
Yes, Mr. Royce.
Who's the best wholesaler in DMV?
I mean, I'm surprised you're not wearing a crown sit on this video chat.
Shit, it got knocked off, baby.
We all know the real truth. Look, Ian's dying to chime in over there. He knows the truth too. I mean,
I got him permanently muted.
Don't hate the player, hate the game, right, big boy?
I'm just out here like everybody else, man. Just
all right, Jimmy. Let's end with this. What's your thoughts? I think I know what your thoughts are. I think all of us have very similar thoughts related to. It's kind of the watch and wait game for like the next few months. Although I think every single person, if they see an opportunity that works, they're going to jump in on it. It's that simple. And maybe they might be somewhat wrong on it, but that's all right. And longer term stuff are fine. I mean, the good part about your building, your new construction stuff is it's not going to be done in the next 30 days, probably, or 60 days anyways, I'm guessing. So like, hey, you just keep working, and the good part is it keeps your employees and it keeps your contractors happy. And I talked to one of our clients recently, and she told me, she was like, I want to flip a few more houses right now because like I want to keep my guys happy. Like, they deserve to get paid. They've been loyal to me. I want to be loyal to them. And in her mind, even if she barely, if she kind of just broke even on her flip, she could at least keep her contractors happy and to work and loyal to them, which I thought was right. I mean, obviously no one wants to lose money on a deal, but that was her insight. And again, who knows? This might be a little like boom come summertime. And again, I mean, obviously risk and reward kind of goes hand in hand based on it. And I think it's kind of sum up what you guys are doing is you're cautious, but at the same time, optimistic when possible.
Yeah, I agree with that. I mean, I think that, like I said before, I think that, we're definitely cautious now. Like, we were talking about numbers at our meeting the other day, and everybody's like, oh, well, what numbers should we be running now? And I'm like, I don't know. I mean, I don't know what it is. Is it, is it like you mentioned before, is it 90%? Is it 80%? Is it what, is it, of what we thought it was worth before? So, I think there's no definite answer right now to that stuff, but I think it's going to come back strong, so.
Yeah. All right. So we'll wait and see. Is there anything else related to like construction, building houses, things like that would help everybody?
No, I mean, what I mentioned before, I would just make sure that you can get permits, that you can get inspections done, that even if you're rehabbing houses, if you're relying on supplies coming from somewhere else, materials, whatever, you make sure you can source all those materials, things like that in order to, because, in the construction world, you live off of draws, you know what I mean? So it's, getting the work done is the only way you're going to get paid until you go to settlement. So, you don't want to be out all this money on all this other stuff. And then all of a sudden I can't get these stairs in, and that's what's holding me up from my next draw. So just, make sure that you are considering all those factors.
Gotcha. All right. Well, good insight, and I appreciate it. And we'll chat with you soon. And I'm gonna get I'll get all your everyone's gonna get everyone's contact here shortly. We're gonna send an email out with everything. So
cool.
We'll pass that along. All right, man.
All right.
We'll see you soon. Thanks.
See you.
All right, RJ's next. Let me figure out a way to update. There we go. Unmute RJ.
You there?
Hey, RJ. What's up, buddy?
How you doing?
Good. How you doing? Are you the only one dressed up on this call?
Hey, I got a lot of heat the other day, so.
Damn, son.
I'm just messing with you. Where's your video feed go, RJ? Oh, there you are. I feel like on Zoom, everyone sees different things. So anyways, cool. Let's hop into it. So RJ, kind of what are your thoughts right now, just related to what's going on in the market? Like, what are you seeing?
So I'm still seeing the market move forward. And what I'd like to say is thank you to the inspectors, the lenders, the title companies for trying to push forward in this unknown time. They're still out there. They're still getting appraisals done. They're still getting inspections done. I'm getting property inspection notices back, and I'm ultimately telling you I'm going to get them faster because everybody is kind of in a panic mode. So with that being said, I have I think 3 or 4 inspections for some sellers this week that the buyer's agents have already locked up, and everything seems to be moving forward right now that I've seen, and probably at a faster speed.
Nice. Let's talk about consumer confidence, buyers and sellers. Like, are sellers getting scared and are buyers getting scared?
Well, I think the buyer currently maybe has been shopping for some time. They understand the market. They understand when a good house comes on the market to make a solid offer. And then from there, the selling side of things, people have been prepping their house for this time to get it ready for the market. So they're essentially ready to hit the market. I think there's some nervousness on the seller side of things, or maybe some anxiety with random people coming through their home, random people touching things in their house, doorknobs, door handles, cabinets, things like that. So with that being said, buyers are still buying, sellers are still listing their houses. I watch the market pretty aggressively. And it seems to me if you're listing your house, it's going under contract fairly quickly. Whether that's going to be the case in the next 3 or 4 months, I beg to differ there. I think it's going to slow down a little bit, but you hope it picks back up.
Gotcha. I'm trying to think what else to ask you that I think is important to ask real estate agents. So obviously you're just Maryland. We've got some other people coming in some other states as well of what's going on. I mean, obviously you're following general practices of making sure things are wiped down and safe. What happens, do you think, if people are just too scared to go in other people's houses? I mean, do you think someone would buy a house without go looking at it, like with virtual tours or something like that?
I had a conversation with a colleague of mine yesterday. I don't know if America's ready to buy a house without walking into it. I think the consumer, when it comes to home buying or the automobile industry, it's an emotional purchase. So they walk through the door, they see themselves at home in that property. Some houses may have a smell to it. You can't buy a house online if it has a cat smell to it, so that's challenging. And I use that as an example is because people buy on emotion, in my opinion, when it comes to the world or America. So with that being said, I don't know, look, does the virtual tours or the Matterports get them into the property? Does it spark their interest a little more? Yes, 100%. I think that's a accurate statement. But I still think the consumer is going to need to walk in the house, get that feeling or get the vibes that it's a good home, or I say attributes of it, or, maybe the quirky things that the Matterport doesn't show on a 3D tour or something like that, that they either like or don't like. So I don't know if the consumer's ready to go full virtual and purchasing things sight unseen. But from an investment side of things, from an investor side of things, it's just a pure numbers game to you guys.
Sure. What question for you? What kind of advice would you give other real estate agents right now related to the market? Like, some obviously are scared. You're pretty fortunate that you have a decent pipeline. You've been around for a while. So like, you have a following with buyers and sellers, and you have a team and things like that. Like, what kind of advice would you give to real estate agents that just are unsure of, like, what should they do? Like, should they go all in and be proactive and try to make a living with doing this over the next few months, or, back burner it for the future? Like, you have any insider thoughts on that?
From a new agent standpoint, I think this could create an opportunity for you. It's an opportunity to build the foundation of your business, to get your database organized. A lot of people are sitting at home now. It's a great opportunity to connect with your sphere. So when it comes to a career change, look, I think there's opportunity. There's some people that are going to get out of this market because they don't have business in it. And you're going to see people really increase or ramp up your business or their business, moving forward, because they're connecting with the consumers, and they're connecting with these people sitting at home. I see a comment on the side. Are you getting higher than normal investment property listings versus standard homeowners listings? I have a fairly balanced business. I have a good sphere of influence that keeps my pipeline filled. And then also I have a good database of investor business that also keeps my pipeline filled. So it's about 50-50 to 60-40 a lot of times. If I take 2 to 3 investor listings a week, I probably take standard retail seller. I probably do 1 to 2 or 3 a week. It just depends on the week.
Sure.
A lot of these people, houses aren't ready. So when it comes to the houses not being ready, there's always some kind of delay sometimes, whether it's moving furniture out or moving furniture in or things like that.
Got it. I got one question just from Vadim, who chatted this, and then Terry can ask his question. Are you getting any higher than normal investment property listings right now versus standard homeowner listings? I like that question.
Yeah, and like I just said, it's a fairly balanced business. So when it comes to my side of things, the business is fairly balanced. I try to work my database or my sphere of influence when it comes to getting retail sellers and retail buyers. And then also I work on the investment side of things, where I acquire investment properties for my investors in and around the Baltimore metro area. And it's just a matter of how fast their construction crews are moving and when the house is ready.
Terry, go ahead.
Hey, Terry, how you doing, buddy?
RJ, what's up, buddy? How are you?
Good.
Hey, man, it's interesting. You made a point a minute ago about how stuff's still going under contract quickly, and so, these buyers that are out there are have been in the market, so they're aware of the conditions. And it's funny you mentioned that because I just wanted your take. I saw a stat that showings this time last year versus now are like way down. But I kind of got the same impression too. We actually just listed our personal residence Monday, and right off the bat, we got within 10 hours, we got 3 agents that reached out where they're like, "Hey, we want to get in," because we weren't doing showings till this weekend. My take is that the buyers that are like, if you take showings for what they are, right? There's a lot of people that are tire kickers, but I feel like the people that are out there now are like, there may be less showings, but it's kind of boiled down to the people who are like legitimately serious. So.
Yeah, it's people ask me all the time, like, when's the best time to list their house, right? And a lot of people, I'm going to say springtime. But I always have a really good market in like December or I say, October, November, December. And the reason why I share that is because there's a more serious consumer or a buyer out there during that time. And that's where I think you're seeing right now. If people are out hunting for a house or looking at homes, they're just not like window shopping. They're serious. They understand, the liability to be out in public right now, if there is any, But with that being said, I think, you're getting a serious consumer right now. So if they're looking at houses, it makes sense.
Yeah. Sorry, I turned my sound down there. Yeah, just I just kind of thought that was interesting. You brought up that point, and I just wanted to kind of get a little bit further of your take on it.
Yeah, and you're like you said, you listed your house. Hopefully it's under contract by now. But with that being said, I think there's some real value having, I say, professional photography, 3D tours on it, exposure of your property, make sure you're going all in on the marketing side of things. And, you're getting a serious buyer at this time. You're just not having people just because it's a Saturday come through an open house because it's nice outside. So I think that has a tremendous amount of value to the seller for yourself and or anybody, but also, the buyers understand the market and hopefully it's good.
Yeah, I agree with that as well. That's kind of similar to the loan applications that we'd be getting as well. It's people that are serious, ready to go. We've had less loan inquiries, but higher quality. And I think that's going to be the case with everything. I think in general, like if you do seller marketing, it'll be the same thing. The people that reach out are going to have the biggest motivations.
Yeah.
And not like you give them a fair offer. It's like, oh, let me see, I'm going to go to this person down the street, and play them against you and see. So cool. Hey, Ian, you want to ask a question real quick for RJ before we throw Scott Freitag on?
You guys say, RJ, do you see, are you allowed, is there an issue with people overlapping showings? Are you able to book time simultaneously, or they canceled all that out?
So we've been trying to not overlap showings. I always try to be proactive and call any of the showing agents that are showing my properties beforehand, get the dialogue going between myself and or representing the seller and or the buyer's agent and representing the buyer. But with that being said, last weekend we still had some open houses that we hosted. We implemented new policies that just, one family or one couple or one person in a house at a time. So my buyer's agents hosting the open houses could kind of control the traffic, control where they're going in the house, what they're touching, and just for safety. You don't want, 10 different families or couples in the house at a time. It could just make for a bad environment. So with that being said, we implemented, make sure you clean your hands, try not to touch anything you don't have to touch. If you want to open a door that is closed, which they all should be open, the agent would do it for you. It's just a little less, hands or germs in the property. And it seemed to work really well. We had a fair amount of people through the open houses. I want to say out of 5 open houses, we probably had a total of like 20 to 25 people come through them all over.
Got it. All right, man. I appreciate it.
Yeah, absolutely. Thanks for having me, guys.
Yeah, absolutely. We'll be in touch soon.
Thank you.
Thanks, RJ.
All right, Scott, I'm going to unmute you in a second. Real quick on some comments that I'm just scrolling through. It looks like Ari wrote, I can't speak for everyone, but I just got 2 new tenants placed in Dundalk, both moving in April 1st. That's a good sign that people are still renting properties. Okay. Let me unmute you.
There about coffee. I don't know.
You good? You all hungry? You all hunker down, Scott?
Yeah, I'm ready, man.
Okay, cool. Cool. All right, well, why don't you real quick introduce yourself and then just jump into, some of the things that you've been seeing out there.
Yeah. So for everybody on there, I know a lot of these people in here. My name's Scott Freitag. I'm a senior lender at Eastern Savings Bank, primarily focused on the investment and commercial side of things. So to say it's an interesting time right now is an understatement, as everybody has alluded to.
Is your bank still lending? Let me ask you that question first.
Yes, we're still lending. Nothing's changed on our end, and our money's not dependent upon the secondary markets, sure. Wall Street, if you will, like many of the lenders that have kind of halted.
Exactly. So everything's portfolio based. What areas do you guys focus in?
Yeah, so
Geographically.
my primary business is local in the Baltimore metro area, but we lend in 5 states: Maryland, Delaware, Pennsylvania, New York, and New Jersey.
And all those states are still lending right now?
I can't speak for all of those because pretty much my whole business concentration is local. As others have alluded to in here, title companies have been great. They're all funding. I got a deal closing tomorrow. But I can't speak for the other areas. I'll leave that to somebody else that may have a better handle on.
Got it. What type of precautions do you see your bank taking right now just to be a little bit safer?
Yeah. So, I mean, I think, we're getting a mass amount of calls from, people that have been left at the table, so to speak, with these 30-year fixed sort of type secondary market lenders just kind of retreating. And, who knows, some are going to return, some may not. That remains to be seen. So we're getting a lot of those calls. Some of those people aren't going to meet like a bank sort of type lending qualification anyway, but I probably see us in the short term here, maybe, being a little bit more. We're always pretty strict, right? We're a bank. We're going to go do global cash flow, and the loans are all full doc. Most of the people have very strong credit profiles. So I see us maybe being a little bit more selective. Maybe some of the marginal deals that we would do, we may not do. Maybe more cash reserves, I think is a big area that we'll probably look at a little bit harder than maybe we did in the past.
Got it. Okay. So, I mean, typical bank stuff. I mean, the good news is you guys are still lending. You want to actively be involved in the community and lend on the right projects, but you're not giving away money at high LTVs. Like you want to be smart. You want to be smart about it, which you should be. And we talked about, was it with RJ or with Jimmy? Yeah, with Jimmy earlier, related to, you got to find supply and demand, and what's what. It's got to be a fair situation. There's not gonna see a lot of 100% financing with little cash out. It's going to be, hey, we'll put up $100,000 for your project, and you put up $30,000 or $40,000 for your project, and we'll give you a fair interest rate on it. You're bringing extra cash to the table, and we'll make the deal work.
Yeah, no, and it's really interesting these times now. And I'm sure there's probably people in this chat call, whatever, that we may have come to me and we're looking for like an 80 LTV, which we can certainly do. We may not have done it on that particular deal, but over leveraged people right now are probably the ones that are maybe sweating more than others. And you guys were alluding to earlier, debt versus no debt. So certainly an interesting conversation to have. Got it.
What else have you been seeing kind of out there that you think everyone could benefit from hearing?
Well, I think, I see some people are being kind of reactionary versus being proactive. And I think all the landlords should be reaching out to their tenants as much as they can to let them know, hey, this is crazy times for me as well as them. And it's going to be difficult, but we're going to get through this together, and kind of let them feel calm, and then kind of figure out what your strategy is. I think it's important to let them know, hey, rent's still due on the 1st. I don't think we want to lose sight of that, because everybody's going to hop on no evictions, and are people going to try to take advantage of the system? Possibly. But I think it's still important to let them know, hey, your rent's due on the 1st. And then I think individual business decisions have to be made. Do I accept a partial payment? Because in normal times, are you going to accept a partial rent payment from somebody? Probably not. It's probably not in the contract of the lease. So businesses have to make that sort of decision of how they want to proceed. So I think letting those tenants know you're here, you understand the situation. There's a humanity side. You're going to work with them, but everybody's going to make different decisions on how they proceed. And then I think after having that is make sure, I certainly see it on the lending side, make sure you keep really good records, because they may come in handy when evictions start happening 6-8 months from now, whenever that time frame is going to be, especially in Baltimore City. So
fair.
I think
I agree.
I think that's really important that, if you don't keep good records, that could come back to bite you, downstream.
I agree. I'm going to just go through a few questions that people asked real quick, and then you can answer those. What kind of DCRs are you looking at right now for commercial deals?
Well, real quick, before we dig in on that, Scott,
Yes,
that service coverage ratio question, I think is a really good one. Do you envision, or do you see, not envision, because that means you would be dreaming it, but do you see lenders having to compress the debt service coverage ratio or expanding them, either one, to get more loans through the door, or B, to tighten up your requirements to force more capital into the door? I think it's a really good question.
Yeah, it's a fantastic question. And I think we've always been, you hear a lot of different things. Our minimum is 1.15. So I don't, as of this call, we have not changed any of our criteria that we were doing, a month ago or in January to now. So that's still in play. But I think it's going to make sense. I think we're going to be, it's that human element, right? By nature, you're going to be looking to say things have changed out there. Is this deal too tight for us? I mean, they're barely squeezing in. Their reserves aren't great. So I think all those things are going to be examined closer. So I think that's a very good possibility that you'll start seeing, hey, are we going to bump up and want to see a stronger debt service coverage?
Right. And I would also think that liquidity is going to become more important the further down this thing goes down the road. I think the more important liquidity in deals, compressed LTVs, actual cash on hand verifications. And actually, while I got you, I don't know if you follow the market, but Carl Icahn shortened commercial-backed securities. I mean, that's got to be something that stinks a little bit, right?
Yeah, he is. And there was that other big guru over the weekend that put an article out that the commercial mortgage-backed security market's it's just get blown. Margin calls are happening. It looks kind of ugly. Jason, I'll forward Jason the article I got this morning out. It's in CoStar. It talks about that commercial mortgage markets and dire straits.
Do you guys have a heavy concentration in commercial office buildings that you guys have?
No, we don't. Against? Thank God. A lot of our exposure is multifamily, single family rentals.
That's good.
Little bit of industrial, even a little bit of less of retail. And it's funny. I had a $10 million office deal cross my desk, probably in beginning of February. Thank God we didn't get involved in that deal.
Yeah, no, I think that's
what's really interesting about that is I think this whole, we're all working remotely and doing this. I think the shape of the whole business world is going to change on this. Our large companies that now they say they had 30,000 square feet, they've got all their people deployed throughout their area wherever they working remotely. Are they saying to themselves, do we need 30,000 square feet of office space?
That's right.
I think that's going to change. We're in here talking mainly about residential. I think the commercial side might take a bigger smack in the face than we're going to take on the residential side.
I do too. I think the commercial space is, in trouble. I got
a ton of questions for Jim Chivers coming up, discussing the office space. I think that space, and not that real retail isn't dead. It's really, malls and stuff's really going to be dead potentially. So.
And let me go through one other thing. I don't know if you necessarily need to answer this, Scott. It's just a question that Joseph Jones put up there related to this, and then we'll let Mike Casey hop on. He said, how do people feel if the quarantine continues in the next month? I don't feel the market has felt the blown from the circumstances just yet. So I 100% agree with you that the market has not felt the circumstances yet. And I'm not sure when that's going to happen, and I'm not sure how low that's going to go. I do believe it's going to dip. I don't know if it's going to be, a few percent or 10% or 20% or maybe even more. And how long it'll go for. That being said, I think what sums up what a lot of these speakers are talking about, and what we agree with as well, is that, we're staying optimistic and proactive because, I want to be involved in the right transactions at the right time. I was talking to somebody the other day that lends and was like, hey, I'm out of lending. And I'm like, well, what do you mean? It's like, I'm out of lending. I'm just going to take a pause. I'm like, well, what happens if someone comes to you, buys a property for $400,000 and they just need $100,000? Oh, well, I would do that deal. It's like, well, you're not out of lending then. Like you know, we're going to find the right opportunities and the right deals that come across. And yes, depending on your business model, it might be affected more than others. Personally, I think if you're buying rental properties and they cash flow properly, you know, if the market dips, you're probably not getting affected. It's a longer term approach, especially if you have the right capital, the long-term capital on it.
Right.
If we do a loan for a fix and flip investor, you know, it's going to obviously be, you know, that's a shorter term project with a lot of different variables. It's going to behoove us to lower our LTV a little bit, knowing that after repair value today might be 200, but tomorrow might be, you know, 190 or 180 or 170 or 160. We're just going to, you know, make proper precautions to do so. So I think the residential real estate market has not fully seen anything actually at this point. But I think it's going to. How far it changes, who knows? We're just going to see kind of what it does, and you make smart decisions. I think all of us are smart enough that, you know, we can, you know, do your own due diligence and, you know, make a smart decision on a deal. And, you know, chances are if you buy, it's like any asset. You buy a good asset, maybe it goes down, maybe it goes up. But if you buy the right asset and you can execute properly on it, you should be fine.
Yeah, I saw Terry Royce asked a pretty good question, and he was asking about HELOCs. Hey, Terry. I can't speak for that, but I do foresee, you know, and maybe somebody can chime in on the chat. You know, like in the last downturn in 2008, most of the banks started to freeze the HELOCs because they were, you know, weary of their position. Well, it was a totally different time, and there were HELOCs at 90 and 95 LTVs. So yeah, I think there's a good possibility you could start to see some of the banks, you know, freeze HELOCs, especially if they think the market's going to dip.
Yeah, I agree.
So anybody that has a HELOC, they should probably get that in cash ASAP to, you know, so that they're not frozen out of that if they do freeze them.
Yeah, and time will tell what happens. You know, maybe this will be a few months. You know, hopefully it's just a few months. I mean, this is also a good potential reset related to, you know, getting the right people involved. And you know what, it doesn't matter if you've done 100 deals or no deals. That doesn't mean that, like, I don't, you know, I know they coin a term in a newbie. Like, I don't really love that term, because let me tell you, a lot of the really strong loans that we've done over the years and a lot of the really strong real estate investors out there, they're newer in real estate, but guess what? They're successful in life. And because they're successful in life and they've saved money that they can put towards these deals, and, you know, they've learned and educated themselves, they're typically more successful on their first project than most other real estate investors that potentially half-ass things all the time. So I don't think it matters how many deals you've done or things like that. Like, I think if you buy the right project and you have the right mindset, I think it goes a long way. So, all right, Scott, I appreciate it.
Thanks, man.
Yeah, no problem. I got to throw Mike Casey on here since we're 2 minutes behind schedule.
Cool.
Appreciate it. Hold on, Mike. Let me unmute you. Mike, you get the honor of Terry asking you questions, okay?
Lucky me.
He told me I wasn't allowed to talk.
King Balin making up the rules. How you doing today, Mike?
Good.
Cool, man. Well, hey, for those that don't know you, I know a lot about you. I'm lucky to call you a friend and business partner on some deals. But I know that you've got a few Airbnbs and you've got a lot of experience. But just for those that aren't familiar with you, give them us like a quick 30-second intro on like your Airbnb experience and history, just so they kind of have a little background.
Sure. I've been doing Airbnbs for 5 years now. We have a couple down in Ocean City, and then some down to one here in the Baltimore market. So I guess in terms of what's going on right now, things have dropped off terribly. It's actually, we kind of started noticing a change. Last year was awesome. I mean, actually, with the last 4 years, everything's been going up. Last year was record numbers for all of our properties. Everything in terms of profit just kept increasing. And then we noticed a turn the beginning of this year. Actually, in January, we started to notice things. And then this month, one of our properties here, like in Little Italy that was always rented every weekend, never had any vacancies or anything like that. This month we've at 0 bookings. Well, everything is canceled now at this point. So
are things canceled right now in the short term, or what's the forward-looking calendar look like through the summer and maybe even into the fall? Like, I'm sure you guys get a lot of bookings for conventions and people coming in town and Ravens games.
Yeah, so we've started to have people even long term, even down at the beach and everything like that. Dropping out now. So I know Airbnb on their main site, they last updated it. I forget what the date was though, but they've shut things down, bookings and things like that. They've given 100% refund to everybody. So right now things are kind of tough. Yeah, left for the landlords and stuff like that running these Airbnbs.
So even if you have like a no cancellation policy, Airbnb is still refunding that money?
Yeah, we had a full refund policy anyway with ours, but I think I saw a notice though that showed up where they put it kind of automatic where they were refunding everybody on all the rentals.
Okay. Have you had any people book at all during the last 2 to 4 weeks, or has it just been pretty flat altogether?
Yeah, no book. Just cancellations. Yeah.
So what are for people that you had said last year was awesome, just giving like a little insight, like to show the change in numbers, like what kind of numbers on a monthly or yearly basis, either bookings wise or whatever you're comfortable sharing, were you guys looking at on some of your properties versus what you're seeing now?
Sure. Just for one specifically, that one that we have one in Little Italy. Last year it would range on the lowest, would make $4,000 a month, and it ranged up to making $10,000 a month. And last year it grossed $75,000. And that's one that we have completely vacant, zero. I'll have zero income for this month.
Gotcha. And I see somebody posted a comment here in the chat that they're switching their Airbnb to allow longer term rentals this week. Is that anything that you've looked into with maybe your Little Italy property, just with?
So I think that's what we're going to have to, I think that is what we're looking to do. And so we're lucky to have that flexibility with that property to be able to, easily switch that over to long-term tenants. Unlike though the Ocean City ones though, that are strictly depending on travel like that is a little more worrisome. So we are lucky though that we did sell some Airbnb properties because of kind of looking at the market and everything like that, feeling that we were at a peak, and with what the income was, we luckily sold some within the last 6 months. So
yes. So as far as I know, having known you, that you're pretty pro Airbnb, once all this shakes out, and let's just say things quote unquote go back to normal, how would what's going on right now change, or maybe not change, your strategy looking at Airbnb properties in the future? Because I know you've constantly been looking to acquire more. So just curious as to your take on that moving forward.
Yeah, well, so I think there's going to be some serious changes with regulations for like cleaning and stuff like that. It's all becoming a lot more regulated. With having permits and stuff like that, and registering your properties in certain areas. So I don't know. It'll be interesting. No, I don't think it is going to be as kind of like those previous years. It was relatively easy. It was still important. Cleaning is still a huge thing with Airbnb and super important, and kind of makes or breaks an Airbnb. But it'll be interesting to see what they come out with, in terms of trying to regulate cleaning and cleanliness and stuff like that. But I think overall, though, I think it's going to be a rough year for Airbnbs this year. Okay.
Well, I appreciate you sharing that. I know when you say it's a rough year, you're a pretty optimistic guy. But I think I'm interested to see all this blow over. I think as it shakes out, has the potential to get some short, quick bookings that could be more in line. But
yeah, and you know what else I was going to jump in about is, hopefully this ends sooner than later, and hopefully by like the the tourist industry is maybe not back to normal, but like back up and running, like I bet you there's going to be a little mini tourist boom because people are want to get the hell out of their houses and get away and be on vacation. You know, spring break locally here was like the first week of April, and you know, we were doing a house in Florida, and the setup was, and it was like a private management company. It wasn't like, you know, Airbnb or anything like that. And I mean, they were pretty sticklers on it. It was either like you forfeit half your deposit, or you gotta, you know, pick the same house that you're in, but we can extend it, you know, to a later date. So the way we have it set up is we weren't sure, so we're going in like July, and hopefully that's, you know, plenty of time. But like I think people are gonna want to go away and do stuff and, you know, fly again. I mean, Southwest Airlines, $39 for a flight right now. Like, might as well go book some travel in the future. You know, lock in on some cheap fares. And I mean, our flight, you know, then is a 25% of what it was. So I don't know. I mean, I think that hopefully all of this stuff is somewhat short-lived. Obviously, this whole time is really unfortunate for tourists, you know, tourism, restaurants, and things like that. And I'm hoping that in general, if they can just stay afloat for a few months, that they'll be stronger than ever kind of when everything comes back. Hopefully that's the case. Cool. Any last words, Mike?
No, other than I mean, I do think there is going to be a lot of kind of opportunity created in the market. And I guess one thing that I've been seeing recently, and actually just got a text today from a long negotiation on a commercial deal where actually I sent the paperwork back yesterday. We were going to walk away from a deposit. But people are very open, and we've gotten a lot of ridiculous terms kind of recently with buying deals under financed. Even with all the low rates and everything's with the banks, I don't know, even just over the last 6 months, I mean, we've been getting under finance deals at 0%, 2%, 4%. So I think it'll be a great time in the market, for buying holds and, also creating notes, even though it's a good time to get bank loans too.
Oh, and thanks, Mike. And one other thing related to this that's a good point to share with everybody is, you know, Mike didn't go all in with just Airbnb. That's not his only income stream. You know, he owns commercial properties and residential properties and flips and rentals and stuff like that. So, you know, unfortunately, one side of the business, you know, if you look at this positively, one side of the business isn't doing great, but the other side of the businesses could potentially be booming, and there'd be opportunities there. So,
yep.
Cool, man. We appreciate it.
Yeah, thanks, Mike. Appreciate your input.
All right, Jim, you are up next. Give me a second. I'm gonna unmute you and oops. Hold on one sec. I gotta unmute Ian too.
We unmuted.
All right. Hold on, Jim. I saw you somewhere. Hold on one sec. Get you unmuted. So Jim's up next. He's gonna share some info with you, and then after Jim, we got Mike Schock, who is a flipper, and then Caitlin Matthey, who is a real estate agent in Pennsylvania market. So that'll help everyone who's been listening patiently locally about local stuff. You know, where we got some expansion to some folks up there as well. So go ahead, Ian. What's up, Jim?
Rivers.
Hey,
how
are you doing?
I can't see you. I don't know why, but whatever.
Yeah, I can see you. You're good.
You can see Chivers?
Yeah.
All right. Either way, Jim, most people can't see how tall you are behind that computer. You just want to give a quick rundown of who you are and what company you're with?
Of course. Can you hear me?
I can hear you, barely.
Yes. My name is Jim Chivers. We are commercial real estate brokers. We are locally owned and operated here in Baltimore. Our offices are right in Mount Washington, and we kind of focused on a lot of industrial and office, a little bit of retail inside and outside the Beltway here in Baltimore. And I know
try to talk a little louder if you can. Try to talk a little louder if you can.
I got these crappy headphones on.
Yeah, try to take those off and see. Go ahead.
Okay.
Way better.
Much better.
There you go.
Okay. All right. So, yeah, we are local commercial real estate brokers. We're owned and operated locally. Our offices are in Mount Washington, and we do a lot of our business kind of inside and outside the Beltway here in Baltimore.
Awesome. I noticed hopefully the quarantine's over so you get rid of that goatee and get back out and doing meetings. We are supposed to have a closing, a deal that you're representing on us happened Thursday. Some interesting things are happening. Are you seeing anything else like what we saw where buyers are trying to push back, renegotiate, buyers are bailing or willing to lose deposits? What are you seeing on that end?
Yeah, well, let me talk overall about kind of the status of what we've seen. And you know this, Ian, and Jason's been involved, and also I've been bugging Terry to get involved in some commercial deals. But commercial real estate's had a hell of a run, I would say, the past 5 to 7 years, especially industrial and even office. And prior to this pandemic, experts and pros, whatever you want to call them, are going to say 2020 is going to be another big boom in the commercial real estate. And I think one key thing important here for Baltimore and important for our recovery is, we have a diversified economy here with med tech, e-commerce, heavy manufacturing, auto import and export. Our port continues to break records and kick ass. Food-related businesses are strong, and construction businesses. So what we've seen lately, and Ian, you've probably seen this, is that I think the investor deals are going to slow down here in the next 2-3 months. The owner-user deals are still happening. I've been on the phone this morning and yesterday, and like you said, we're supposed to have a closing tomorrow for a local or a national company that's going to buy, hopefully, our building on Patapsco, unless you tell me otherwise. But the owner-user deals are still happening here in Baltimore. That's your construction company that has a need for a building that wants to make it happen. But I think the investor deals are going to start to slow down a little bit here.
Yeah, and I think leading up to this, that rates were compressing. Cap rates were compressing anyway. Capital was easy for your owner-user types to go out and buy their own building, and it came down to, I can rent for X, or I can buy for Y, right? Like, so in the end, it kind of worked out, I guess, for the owner users and popped that bubble. How you doing? Someone's just walking in the office. Yeah, no, it definitely helped pop that bubble. Now, something you brought up was about office space had a hell of a run going through 2019. Coming into 2020, who knows what that would have been. But now with everybody home teleworking, companies maybe having more strict policies on how many people are in a room, like how long does any of this continue? You see office space being the new retail bubble. Or what's your gut feeling on it?
Well, listening to Scott, and I'm glad Scott's not wearing a suit. If he did, I'd have to throw one on. But Scott actually made a point of your bigger tenants, 20 to 30, 40,000 square foot tenants that have office space. Like, for example, Legg Mason, even though they're vacating or haven't done already, they're going to feel the pinch more than anything. And one thing I'm going to keep my eye on is I live here in Locust Point, is the Port Covington project. And how are they going to be able to survive the storm that we have right now? Just because, I've heard just hearsay that they can't get their next round of financing until they have identified that tenant. So projects like that will be affected, I think, more than anything. Your Legg Mason vacancy, your bigger office spaces will be affected. But still, I think human interaction is a key ingredient to a healthy economy. People still crave attention, want to go to an office. Someone like you, Equity Warehouse, you want to go to your office and bother Dan for a little bit. Jason Balin wants to go and get to his offices. So your smaller tenants, say 5 to 15,000 square feet, are still going to be strong. It's just your larger type, national credit tenants are probably going to scale down a little bit, and we'll start seeing that here shortly.
Right. And something that you brought up yesterday I thought was interesting on our phone call, we have a few minutes left, is I didn't realize that we actually have call centers here locally. Then you've leased a few properties to call centers. And we all know that a lot of companies are operating from home, running their call centers, telecall centers, whatever the heck you want to call it. So I guess I don't know how much market cap that has here locally, but I guess that's something else that we all need to consider is, how many people can you get into one room and what the repurpose is, right?
Yeah, that's something I got to make a call into one of my clients. In December, we filled one of his vacancies, 6,000 square feet of a call center. Are those going to be non-existent now? And who wants to be crammed into a small space when you have 30 to 50 people in a tight area? So that's something also we're going to be keeping an eye on.
Yeah, and something else that you brought up earlier about the port, and I think that's a valid point. When you look at commercial real estate, you deal with every facet of it, from office space to industrial to Class A full tilt stuff, is that our port's jamming, right? Like, cars are, there's going to be a car bubble. Everything's going to be on a bubble. That's all you're going to hear for the next 2 years, right? But cars are still coming in through the port. Goods are still coming in through the port. That industrial space, I mean, that's a true need, right? Between e-commerce, the port, people shipping stuff, right? Like, I mean, it's still a asset class that's attractive, right? And always attractive.
No, and I've been on internet reading JLL reports, CBRE reports, and kind of what they're saying here in Baltimore. And the fact where we're located, kind of mid-Atlantic, centrally located, we've got the port that's been kicking ass. We're due for a quick rebound just because of that. Where we're located, wide variety of different industries here in Baltimore. We're lucky to have that. I don't think we're going to suffer like some other cities, but Baltimore here, I think, will continue to be strong. But, the stress and anxieties that people have right now is how long is this going to last? Is this 60 days, 90 days? I think then we're going to be due for a quick rebound, and we'll all be, happier than hell towards the end of the summer. But, some reports that I'm reading, this could go on for a year or 18 months, and that's going to do some serious damage to, your supply chains, your truckers, the Horowitz family is not going to go to a movie or the favorite restaurant for a while. And I know you love, vegan food, but that's something that's, the vendors that are going to be affected, and they all have, rents or mortgages that they got to pay. So the faster we get out of this, the quicker we'll rebound.
Well, I know we were looking at a facility that you showed us, and it's not really our market space, but it was a nice build out restaurant bar type. I mean, thank God, that we didn't buy it, and it wasn't in our asset class, and we were really uncomfortable with it. But how we bought it, I can only imagine the phone calls I'd be calling you with right now. But yeah, no, it's definitely, you bring up a valid point of those asset type classes that can truly be affected. Before we hop off and pass it over to Mike Schock and Chris, you have anything else you want to mention or what you're seeing in the commercial?
Yeah, I mean, this again, where we're located gives us hope that the commercial real estate sector will return to normalcy here by this summer. Deals are still happening, like you talked about the deal we're doing tomorrow. Guys are probably going to be a little bit more analytical over their deals and underwriting a little bit harder and see what the credit tenants are in terms of investing. But business as usual for us. We're gonna have to ride the wave out here for a little bit. But thank you for having me, and Terry and Jason. Thank you guys.
Yep. Thank you. Appreciate it. Cool. All right, man. We'll be in touch. We got Mike Schock on the mic next. Hold on, Mike. Let me unmute your thing. Are you there?
Yeah, I'm here. Can you guys hear me?
Yeah, there's Mike.
What's up, everybody?
Loud and clear, baby.
How are you?
Good. We are hanging in there,
awesome.
Getting everyone's perspective, seeing what's going on. Obviously, different niches are feeling this whole thing in different ways. So I think it's been a really productive talk to share everyone's experiences with everyone else. And also, I think we said at the beginning of the call, but I'll say it again, that we will, after the call, on the list, on the meetup email list, we'll share everyone's contact information in case from all the presenters. So in case something came up that people, sparked something in people's mind they wanted to work on one of the presenters about. So we'll make sure to do that. Okay, Mike, what's happening in your world?
Everything's chugging along. I mean, I was telling Jason yesterday that we actually had 3 properties go under contract. So my wife's also a realtor. Not that we're holding open houses now, but 2 weeks ago, right before St. Patty's Day, we said, well, what do people have to do? Nothing. So she held 3 open houses, and she was slammed. She actually got 2 of the 3 houses under contract with 3 offers each, full price. So
wow, and they're properties of your own that you had rehabbed and you're ready to sell?
Yeah, we just put our property we have up in Glendon, we put it on the market on Friday, and by Saturday we had 2 full price offers and we accepted 1 Sunday. So I think people are still buying. I think people, they need to move. I know a lot of our leads coming in for us to buy are people that are relocating, whether it's job or whatnot, or they've already sold a house. So I don't see it. I see it slowing down a little bit, but people are still looking to buy and sell.
Okay. Yeah. One question I've brought up a couple times, and I'd be curious to hear your input on it, is where you think that, like you say, you just put 3 properties under contract this week. Where do you think these opportunities opportunities are going to come from? Like the deep discount deals, like what kind of scenario do you think would create these low buy opportunities?
It's funny because I think a lot of people are panicking. So our lead generation has come in the last couple of days where, we've gotten a lot of leads. And when I'm talking to the people, some people are saying that, hey, I want to hold off right now. I don't want to sell. Other people are like, I need to move. I need to do something. But I think the low opportunity purchases will be down the road a little bit. I don't think anyone's panicking that bad right now. I think maybe as times get harder and maybe things get tighter, and maybe if unemployment goes up, then that's where you'll see that. But my biggest fear from a flipper, my wife being a realtor, is if the courthouse is closed and can't do the recordings. That's my biggest fear. It'd be like we lived through last summer or last spring with Baltimore City closing down.
Yeah, we were discussing that earlier with Amin from Universal Title, and so far things are moving along. They're able to do electronic settlements and recording documents in the courts electronically in most jurisdictions, and a few they have to mail away. So it creates like a little bit more risk for title insurance, but so far they're still covering everything. So I totally agree, because we need to close transactions. We need to keep the industry moving on some level, right?
Yeah. And you guys mentioned permits earlier. I know Jim touched base on it, but I know our permits, Hartford County, they are a drop off. You go in, you just drop off the permits, and then you'll communicate with them online and over the phone. I know Baltimore County, my contractor sent me a picture. You have to send, do an hour appointment, he said, or call in and set an appointment. And then he shot me a picture of where everyone was sitting, and they were all spread out. So they are open. That's what we need to keep open, because I have friends in other places, other states. I know Boise, Idaho's pretty much closed down their offices. California, I heard they're shutting down some things as well. So yeah, we got to keep this open, or everything just comes to a halt.
Yeah, I totally agree. And we've heard some rumors about what's going on in Pennsylvania too, and we're gonna have some people coming on talking about that too, because it is a market overlapping market that affects some people on the call today. How about on the tenant side? Have you had any disruption coming yet on rental properties?
Not yet, knock on wood. And that's our probably another fear of ours, is that the tenants out there here, well, I can't get evicted, so I'm just going to shut down and not pay any rent. That's our biggest fear. So how do you combat that? I don't know. I mean, if unemployment goes up and nobody doesn't have the money to pay, I guess they can't pay. But we are communicating with our tenants. Like was said, the previous speakers, just communicate. They need to pay. They need to stay where they are. But, I was reading also something about some of these messages on the side about these newbies saying like a new investor saying, what can I do now? Guys, now's the time to build your team. Your team is your realtor, your hard money lender, your contractors. You never stop the momentum. Anyone who's out there thinking about pulling back, why would you pull back? Whether you get the deal and don't do it, maybe you scrutinize a little bit more, but never stop the momentum. I was told that early on in business, and I've always lived by that. You got to keep the momentum going. And for the new people, once you get into a deal, you need to be able to close. If you say you're going to do the deal, you got to follow through. You got to close.
Yeah, that's a good point about the team building. And I also, like we were talking about earlier, when things get disrupted like this, oftentimes the cream rises to the top. The people who you're going to want on your team are going to be the people who are still around, right? And then some people who are less prepared business-wise for an event like this might not be there. So no, I totally agree that, building a team out of the people who did operate well enough through a situation like this is it's a really good call. It's a really good call. I like that.
Yeah, I think the opportunities too are going to be, just expand your network now, create the relationships now. I think we all know that off-market deals are the best. And I really think that's where a lot of these deals are going to come from. Like I said, our lead generation, we're talking to people that want to sell. They're not holding back. Some people are a little apprehensive. For the most part, everybody wants to sell. They want to move on, find something new.
Yeah, no, I hear that. What else is going on? Terry, you got anything you had in mind for Mike or Jay? Anything additional stuff? I had a few questions on a list, and I pretty much rolled through them.
Yeah, I mean, I agree, Mike. I mean, it's a good point. And if like Chris said earlier, I don't know if you were hopped on earlier in the call, but he was talking to a real estate agent on an interview a few years ago. And the guy said, during times like this is when I go all in. And it's like,
Yeah,
I'm gonna go all in and spend a lot of money on marketing and stay in front of people. And I know internally we're trying to do a lot of additional marketing. Not that we really need to do it as much because lots of people need capital right now, but and we want to make sure we're always on the cutting edge and in front of as many people as possible. And it's with anything. It doesn't matter if you're lending money to somebody, buying properties, leasing properties to tenants. You want to get the best of the best of the best. I almost cherry pick whatever best deals are out there. So whatever the best opportunities you can get in front of you right now, you're going to take advantage of. And if you don't have opportunities right now because you're newer or whatever your niche is just doesn't have a ton of opportunities, like Mike said, you're right. It's build out your network, learn. I mean, since I've had more free time now in general with like less actual transactional stuff, because we still get a lot of lead flow. I'll tell you that the leads we're getting in recently have been more qualified. Like the deal per deal, like we would, in general, we get 1,000 leads per month and we were closing 25 loans a month. And our lead flow is significantly less, but our lead quality is a lot better, which is great. That's the best case scenario if you can do that. It's just like you going to do a marketing campaign and you getting 5 sellers that call you and all of them are somewhat qualified. You close on one of them like that. Those numbers are great. So you can spend time on learning and listening to podcasts and educating themselves on what's going on. And I love being able to right now catch up on education and learning, because that's one thing Absolutely. That, sometimes falls into the back burner when you're stuck on transactional stuff.
Yeah. And just, essential businesses out there. We just had, we dug a well yesterday. We have home inspections going on. We have appraisals going on. So it's not like anything slowed down on that point. Our lead generation is up. I mean, we're busy. I mean, it's not like we're sitting here with nothing to do.
Exactly. And I'm going to guess that you, along with everyone else we've really talked to, that when the right opportunities come, you're going to buy. You're going to buy a flip. You're going to buy a rental property. You're going to do what you got to do as long as it's the right numbers. And
Absolutely.
And I've, not that we're in the stock buying business, but it can relate to, I've been watching a lot of these analysts, these guys buy, and they're like, I would dream to buy some of these stocks at the prices I can get them at today. And yes, I might look like a sucker tomorrow if these things decline 10 or 20% like they have, but you know what? They're good assets. They're good investments, and the price is right. I'm going to take advantage of them.
Yeah, absolutely. Yeah. I mean, there's going to be a lot of great opportunities down the road. How great will they be like before? Who knows? But
yeah. And
like
what?
As long as you buy it right and finance it right, you're fine.
Yeah, exactly. And guess what? You might buy a property for $100,000 today and it might be worth $90,000 tomorrow, but you do the right thing with it and that works. And then tomorrow you might buy a property worth $90,000. That's worth $90,000. The next day you buy it for $80,000. It's worth $90,000. So it averages out. So yeah, I mean, I think you're summing up what a lot of successful real estate investors have in mind as well is, we're out there, we might stay a little bit more liquid than we did in the past. So we don't pass up on opportunities. And, maybe we got to play defense on our current projects right now. We haven't really talked about that. Maybe you just got to play defense to just get out of your current projects so you can unload, get liquidity back, and then, move it to something more profitable.
Yeah. And what we're seeing is that when our projects are finished and we put them on the market, they're selling quick. They're not sitting there, which is great news. Because we were a little worried that it would stagnate and we would take days of market would go way up, but it's not.
Yeah. And like you said, and we talked about earlier, if the higher powers shut things down, we're screwed. Title insurers and permanent offices and courthouses and things like that. But I think based on other things that are currently in place now, they don't want to do that if they don't need to. And they know what happens if all that falls apart. And there's a lot of people involved that would get hurt if real estate came to a halt. So, but it looks like everyone wants to pivot and do whatever, work remotely. And, it's good to hear that everyone's still very proactive in this space and optimistic and not just, hey, I'm going to hide under my bed, and wake me up in 3 months.
Yeah, it's definitely the wrong mindset.
Exactly. So I, Mike, certainly appreciate it. Like always, enjoy yourself.
Mike. See you, boys.
See ya. Caitlin, I'm going to unmute you. Ian's, I think, meeting with somebody. So me and you will chat until Ian hops back on. Hopefully that's okay. Ask to start your video. Unmute you. Hey, Caitlin, how are you?
Hey, good. How are you?
Good. Yeah, Ian just texted me. He said he had someone walk into his office. So hopefully he's staying, 6 feet 6 feet away, and he's smart about his social distancing. He's probably not, but that's on him. So we'll chat until then. So Caitlin, thanks for hopping on. Maybe just take a quick moment, tell everybody a little bit about yourself, and we'll start with that.
All right. I'm a realtor out of Keller Williams in Montgomeryville in Pennsylvania. It's about 40 minutes outside of Philadelphia. Going on my 6th year in real estate, and I work mostly with residential home buyers and sellers and investors in Philadelphia, Montgomery, and Bucks County.
Nice. What are you seeing out there? Are people still buying? People are still selling? Like, you might have to educate some of us related to if courthouses are closed or title companies are closed, but are real estate transactions in general still kind of moving forward?
Yeah, it's in Pennsylvania, I feel like it's been changing every 30 minutes.
Okay.
But I mean, as of last Friday or Thursday night, when the governor made his first announcement for shutting businesses down, I mean, everyone in the real estate industry was considered not essential and shut down. But our title companies are petitioning to stay open. And as of Monday, title companies and lenders are considered essential. Real estate agents are not. So
can you, if someone came to you today and wanted to list their house, could you do that?
Well, so what I'm doing in my business, and what I think a lot of people are doing, a lot of realtors are, we're in our MLS, we're allowed to promote or market coming soons. But the tricky thing is you're only allowed to do that for 21 days ahead of time before you make it an active listing. So fingers crossed we're allowed to sell real estate again, or make it easier again the way we used to do it in 21 days. So there's, in Montgomery and Bucks County, it's been a slow climb with coming soon listings. For a lot of people are also taking listings off market or temporarily off market or withdrawing as well. So
do you have any, go ahead, sorry.
So what I'm doing personally with my listings, and I have a few, I've just been putting them in and marking them as coming soons. Sadly, I don't have any pictures of anything yet. So once I'm able to get some pictures of the properties, then I'm going to start doing some heavy virtual marketing and virtual tours and all over social media and stuff like that.
What about properties that were already under contract with settlements in place with buyers looking to
yeah,
move out of one house and move into the new house?
Yeah, so this is where it gets pretty tricky as well. So I had a few transactions under contract. They're still under contract. Nobody's pulling out of those. So what Pennsylvania Association of Realtors put together a new addendum just for this situation. What it does is it pretty much kind of puts a pause on any of your properties that are any of your transactions currently, right? If you're putting in an offer on a home, you can submit the addendum with it. What it does is, if sellers and buyers agree to the addendum, then it can put a 30 or 60 or a 90-day pause until you can meet your contingency timeframes.
And do you feel people are just backing out though at that point, or are they still staying in the game?
I personally haven't had anyone back out. We're not allowed to be, as of Monday, we're not allowed to be out showing homes anyway. There are some people doing that, but I don't think that's in business best practices. So there's been, since Monday, it's kind of been like a whirlwind of trying to figure out exactly what to do. But that's how I'm working it. But yeah, so the addendum will protect you. So because we're not allowed to, I have a few people who haven't even had their inspections done yet, and there's a few inspectors out there, but I don't know them and I've never worked with them, so I'm not going to put my buyer's best interest in someone I don't know and don't work with. So we're signing the addendum.
And potentially an issue that's going to eventually come out of this, which is not necessarily a good thing, is if this market starts taking a turn for the worse and starts depreciating, these buyers are going to second guess some of these things. And I don't know if they're still liable to buy or not, but hey, if I'm buying a property, a primary residence for $200,000, and then I see that, the market's shifting and I could probably get it for 180, I'm probably just going to back out of that and move forward if they have the ability to. And that sucks, unfortunately.
Yeah, every situation is going to be different and tricky. I had one of my clients, he works in the travel industry, so he's at a big risk of losing his job. One of his big competitors lost his job, but luckily his wife is able to carry the loan by himself. So you're going to see, I'm sure you're going to see a lot of that because not everyone's qualified, obviously, to carry loans.
Yeah, it's unfortunate. I don't know if you were on early enough when I was telling a story about we had a property that we had foreclosed on that we sold, and it, the guy put under contract like 2 Fridays ago and supposed to settle last Friday, and he got cold feet at the table, and it was a cash deal, and he was like, just take my deposit, like I'm uncomfortable, like I'm not sure what's going to happen, and that was fine, but like he wanted to extend it for 30 days, and I was like, we're not extending it for 30 days, not because like I didn't want him as a buyer, and if for instance he comes back in 30 days and wants to settle again, we'll sell it to him if it doesn't sell between now and then, but like I just didn't want to keep us on the hook for it. And I think that's going to be hard for buyers and sellers of like, oh, let's just pause for 90 days. Like shit changes in 90 days, unfortunately. But,
right. So I guess if you're representing a seller and if you're a realtor, what I would do is I would ask for bigger deposits, 10, depending on how much the house is.
Yeah, fair.
And to protect yourself in that way.
Yeah, fair enough. So, okay. So no real estate transactions can even get on record. Like, let's say you have it's a private sale. Let's say you have a property for $100,000. You want to sell it to me and I buy it from you.
You can do that. You can do that. It's just, you're not gonna be able to get, there's always a way to get things done. It's just like, if you want inspections, that's not going to get done. If you want to get a UNO from the municipalities, that's not going to get done. But title companies are now open. So, and lenders are working. So
got it. Well, because the only reason I was asking is like, because we have an office in Philly, and one of our partners, Ian, is hopping on in a few minutes, and I'm pretty sure. We close deals in that office in Jersey, Philly, and Delaware pretty regularly. I don't know if that's a Pennsylvania thing or a Philadelphia thing that you're talking. This is a PA thing, right? It's the whole state.
Yeah, it's ordered by the governor. So
yeah, it's a PA thing. Okay, yeah, because it's interesting. And again, like I don't know if there's real estate agents involved, and these are off-market investor deals. But yeah, I'm curious. So yeah, what are you kind of doing in free time without there being a lot of transactional work that has to be done?
Just building my database. I've already been doing a lot of virtual stuff anyway, but I'm just putting myself out there for buyer-seller consultations, either on Zoom or Google Meets or even just FaceTime. So I've been promoting that pretty hard. I've just been reaching out to all of my past clients and potential ones, and just been calling them and keeping them updated with what's happening in the real estate market. And a lot of people are very interested in very good discussions. So it's just it's another way to reach out to people and just kind of offer them help, see if you can help them in any way. Unfortunately, I think there are going to be a lot of people that aren't going to be able to afford their homes after this whole thing is done. So sadly, I hate to say it, but they might have to sell their houses in a few months. So just trying to build my database, and when the dust sort of settles on this, I'll be ready to go. And I think there'll be a lot of houses to sell, and buyers will still be out there. So, because we were coming from a very competitive spring sellers market, like 2 weeks ago, at least up here. We were going through open houses where there'd be like 100 to 200 people coming through these open houses. Yeah, and like 10 offers. It's just this area. I don't know how it is in the rest of the world, but it was pretty crazy. And then it just kind of came to almost a dead stop, right? So I think buyers and sellers are just kind of waiting it out until we get the go ahead to resume what we were doing before this whole thing started.
Exactly. And I guess we'll see what happens because interest rates are still low. Who knows what's going to happen with that? But, like earlier I was talking about with RJ, this guy, realtor RJ, he listed a property for us, and we very quickly, we got a property under contract above market because the guy wanted to lock in at a low interest rate. And, he wasn't nervous about it. And he was like, hey, I need to buy a house anyways. I might take advantage of it now. I want to lock in and do it. And, it worked. So yeah, I guess we'll see what happens. Hopefully for everyone's sake that this gets moved along very, very quickly and everyone get back into business. And I'm willing to bet that we kind of have a little boom with a lot of things, especially with real estate if the rates stay low as things kind of come up. Like people are wanting to get back on their way. I mean, especially if it happens in the summer, because people were probably planning to move in the spring so they could get into new school districts for the fall. You know, and maybe they have to make quicker, more emotional decisions than they had to in the past. So that could potentially be a good sign. You know, we still might have backlash related to banks being able to, you know, process the loans that quick, especially if they're laying people off now and then they get like a mini boom. But, you know, those are all kind of bigger picture things that could occur.
Right.
Cool. All right. Well, I appreciate it. Is there anything else you want to add? We're gonna pass everyone's information. There was a few people that chatted asking for your info. They said, "Hey, okay. I'm a fellow Keller Williams agent."
Yeah.
I saw a few things. Roger is looking for your information. He's looking for a realtor in PA, things like that. But we're gonna pass everyone's info along, so we'll get that. And yeah, I mean, if you want to add anything, feel free.
Just that I think it's interesting that nobody has ever dealt with this situation quite like this before. I mean, similar, but not quite like this, right? So I think it's important to realize with any transaction that everyone's just sort of navigating through this. And if we can just sort of support each other, like keep doing things like you're doing with these conference calls and even just a phone call to other people that you're working with and local businesses and just trying to help and support each other. I think that's important. And
sure.
Go Birds.
Fair enough. I appreciate it. All right, Mike Wagner, you are up next. I'm going to unmute you and your good old buddy, Terry. There you go. Hold on one sec. Hang on one sec. There we go. Howdy.
How we doing?
Good. How are you?
I'm really good, man. Thanks for having me on. It's been a great conversation so far.
Absolutely. Terry, you unmuted? I know, or are you just sitting there silently in your basement?
King Balin unmuted me. Thank God. Playing host dictator over there. Jesus. No, I'm good. Hey, Mike, how you doing today, man?
I'm good, man. How are you?
I'm doing great. Appreciate you hopping on here. You know, I'm lucky enough to, well, unlucky, depending on how you view it, to know you pretty well and call you a friend. And you're also one of my coaches, so I'm glad to get to spear you a little bit today. So, but for those that don't know you, give a little quick 30, 60-second intro about yourself, just so the people here in the Baltimore market know you and what you do and your past and current experience.
Yeah, long story short, I live in Western New York, about 350 miles from the hot spot that is New York City these days. And I started out as a typical landlord, buying duplexes through 4 families and fixing them up and renting them. Ultimately, I wasn't making as fast progress as I wanted. This was back in 2007. So around 2011, I pivoted completely and transitioned into self-storage. And that's all I do now. Our strategy is simply to buy undervalued storage facilities and optimize them, get them up and running, and then either live off the cash flow or sell them to extract our equity and move it into the next project. So it's, it's a very low volume, high margin game. I mean, where I know a lot of you guys are doing 100 deals a year, I'm 8 or 9 years in and I've done 5 deals of my own. I also coach some folks. And I participate as a minority partner in those, and they do a little more higher volume just because there's 10 of them instead of just me. But in a nutshell, that's what we do.
Cool, man. So tell, what have you been seeing the last year or two in regards to self-storage, and then what are you seeing now within the last 2 to 4 weeks? You know I've had some offline conversations with you, but just to share with everyone on the call what you're seeing and what you expect.
Yeah, and here's the deal. Like storage has been a buzzword for a while now, and it's been a relatively hot market. There have been people in our industry for 3 or 4 years saying that, we're at the peak and things are about to turn downward, and yet it hasn't happened, and we keep rolling. As far as how things have changed over the last, 2 to 4 weeks with everything that's been going on, it's really hard for me to say. I think it would be hard for anybody to say in my industry or at least who uses my strategy, just because it's so early. What I see this very unique set of circumstances offering us who are in the storage industry is really a couple good tests. For one, and anybody who's heard anything about storage, one of the things they usually hear first is that it's quote unquote recession proof. And I always caution people against that. It is not recession proof. I don't think there's any such thing. But I will say that I believe it to be recession resistant. So if the greater market experiences any sort of correction in the coming weeks, months, hopefully that will be the extent of it. But if the economy has a greater ripple moving forward, we're really going to be able to see, is storage as insulated from the greater economy as we all think it is? I tend to believe we're going to get confirmation. And early signs of that, again, this is far too early to draw any conclusions, but over the last 2 weeks or so, I'm an owner in 3 properties currently of my own, and then 8 or 9 of my students. And I have access to all our occupancy info, and we've all experienced an uptick in the last 2 or 3 weeks. So, one of the things that, 2 of the things that storage kind of relies on are consumerism. So when the economy's good and Americans are buying a whole bunch of crap, we're happy to give them a place to put it, and they pay us monthly rent for that. And so one might think when the economy tanks or at least softens, our market rents, our occupancy might kind of soften and go down. But kind of the saving grace in storage is that our demand can be bolstered and driven by transitions. And clearly when there's uncertainty and when the economy softens, a lot of people are downsizing, foreclosures, that sort of thing. So what we lose based from the consumerism driving force, we gain in that transition. So I'm excited. I wish it weren't in such tragic circumstances, if that's not too dramatic a word. But I see it as an opportunity to really test what I think I know about the industry that I've been in for the last 9 years. The other thing I'll say, I mentioned 2 tests. The other one is, I think it's going to be a good test for the strategy that I've deployed myself. I know Ian earlier in the call mentioned some conversations that he and I have had back and forth about leverage and what it's good for and what it's not good for and that sort of thing. He made me out to be the uber conservative non-leverage guy, which is only half true. But I think leverage is hugely powerful. I used it to build, the portfolio that I have today. My point is always that there's a time at which enough is enough, and deleveraging can be a very wise move. And that's what I've been doing for the last couple of years. So long story short, I just want to share with you the strategy I've deployed from a conceptual standpoint, because this can apply to anything, not just self-storage. And I am very grateful that I've been adhering to this up until now, just because it gives me a level of comfort when a lot of people are feeling a little more rattled by some of the uncertainty, at least in the circles that I've been talking within. And that is this, right? We operate in tertiary markets, which are the last ones to feel the ripples from Wall Street when things get shaken up there. The folks where I am investing don't feel it. We're talking about very rural markets, some of the least populated counties in some of the states that we're operating in. We also do value add. And so we're buying 40, 50 cents on the dollar. And then I think most importantly is that when we make a purchase, it's always, and I get this question from investors a lot, well, should I buy this one? It doesn't cash flow great, but I could flip it quick. And I always err on the side of being conservative and say, listen, you need 2 viable exit strategies. And so you may think you're going to flip it quick, but if there's a virus all of a sudden, right, who would have thought that could be one of the things that stops you from selling a storage facility? But all of a sudden, that's a reality that nobody saw coming 6 months ago. And it's just an example of if you put yourself in a position where you win, whether you flip it and make quick cash, or you win if you hold it long term, say 3 to 5, 10 years, if that's still a victory for you, there's no way to lose, because one of those 2 things are going to happen. You're either going to sell it or own it, right? And so I'm excited from an investment standpoint to see how this plays out over the next couple months. My hope is that everything within a couple weeks or months lifts and goes back to normal, and maybe we do even see a bit of a surge because of pent up demand, in all realms.
Yeah, something I want to touch on. You had mentioned that you could see this potentially driving occupancy on your properties up. In theory, that could drive the income up, but do you think that would drive the value up, or the cap rates are going to change a little bit depending on what the turnkey buyers models are?
Yeah, that's a really good question. And I think it's a valid point to consider. Just because our income goes up doesn't mean that our valuations will also go up. Now, those things are usually tied together, but if there's other forces, as you mentioned, like changes in the cap rate that are associated with either, tighter lending restrictions or whatever the case may be, we may or may not see any actual increased equity as a result to our increased income. But the thing is that's the beauty of it. When your income goes up, yes, it'd be nice for my revenue to go up and my value to go up. But if either one of them is going up, I'm not going to be in that much of a hurry to take any action, right? I'm going to wait until we've gotten to peak valuation. So the other thing I want to touch on is that one of the things that I believe gets storage investors specifically in trouble is when they start to blur the lines between investment and speculation. And I think where we as an industry are most guilty of that is with ground up development, where we're taking on these anywhere from $2 to $10 million. And this is not my strategy. It's not something I do, but it's out in the world, and it's been very rampant for the last decade or so in storage is, developing from the ground up these very large Class A facilities in prime markets and, throwing together pro formas that look relatively legitimate. Yeah, we're going to take this $7 million project. It'll be worth $11 million within 4 years. And looking at it from the 10,000 foot view, it looks to make sense until you realize that the exit cap rate required to get that are today's cap rates. And we have no idea what they're going to be 3 to 4 years from now, right? And so that's where the speculation takes over. And with numbers that big, a cap rate shifting just by a point or two can basically cannibalize all of the profits, right? And so that's kind of what keeps me out of the development game, and why I prefer to kind of mitigate risk through buying existing value add properties and then tacking on some expansion or development to those properties. The difference being we're funding the entire expansion through the project itself in the form of cash flow.
Awesome. I know we got just maybe a minute or two more here. We got to wrap up, but is there anything else you want to share about your experience with self-storage, or I know you've got a lot insights to share, a lot of different things versus leveraging, deleveraging, storage, or whatever it may be, but just anything to wrap up. And also drop a link in the chat here to your group. I know you have a pretty active Facebook group. After you hop off, people can join and connect with you.
Yeah, right on. I'll do that for sure. I think my thing is, again, I'm not opposed to leverage. I think it's a very powerful tool. My 60-second soapbox that I'll jump on is that there's nothing wrong with it as long as it doesn't compromise your ability to survive the uncertainty that gets thrown at us in situations like this. Very quickly, the world looks at you can't have the reward without the risk. And I know that to be true, but I also don't believe, and I reject the idea that you need to take bigger risks to get bigger rewards. I think as sophisticated investors, we can all benefit from knowing that we have the ability to compress our downside risk to darn near zero, to where if things go sideways or upside down, you don't have to feel that in your daily life. It'll bruise your ego a little bit and you'll wish you had done it better, but it doesn't have to change your day-to-day life if you structure it properly. And so that's kind of pinching that downside risk and yet retaining probably not all of, but most of the upside. It's kind of like swinging for a base hit instead of a home run. So take that for what it's worth. I will pop in my link. If anybody wants to talk storage, I'm always happy to do that.
Appreciate it. Appreciate it. I love base hits. Hey, listen, you do 4 base hits, it's a home run with a lot less risk. That's my thought process. Thanks, Mike.
And you got to get on second if you want to steal third, right?
Yeah, exactly. I love it. Listen, slow and steady wins the race. Because if you could jump up like this, chances you're gonna fly right back down. But if you just tick along over and over and over and over and over, you get a little speed bump here and there. It's not the end of the world. Appreciate it. Definitely appreciate you chiming in. All right, so next up we got Ryan Huck. I'm going to unmute him in a second, and then after that we have our partner that runs our Philly office, Ian Walsh. The last two people are both Philly, Jersey area, so that'll be helpful since a lot of the stuff we've been focusing on has been DC, Maryland, Virginia. And as soon as Ian's done, we're going to do a little Q&A for as long as all you brave people want to be around. So I know everyone's stuck around. We had about 370 people that started. We got about 172 people still left, which is great. I know this is kind of long, but I think it's important, and I'm hoping everyone's getting value, and I'm sure people are also going to have some questions afterwards. So Ryan, I'm unmuting you, and hopefully you can hear us and we can hear you.
I can hear you. Can you hear me?
Absolutely.
Hey Ryan, what's up? Ian over here.
Hey Ian, how are you?
Good. Hey man, just real quick, if you want to introduce yourself, where you're from and what you do and what brokerage you're with.
Yeah, I'm from Ocean City. I'm getting some feedback. Let me see if I can. I'll just take one piece out. That should help. From Ocean City, we do a lot of vacation, second home sales, second home rentals, investments, and rentals in general. Been in the business about 6 years. So I've seen it from the flatness after 2008 all the way up through the current run and where we sit today.
Okay. And so what do you think, so currently what are you seeing in the market I'm assuming you do some of the weekly vacation rental stuff. I know you concentrate on a lot of home sales. Have you seen a little bit dip in the market? Have you seen prices catching up, getting away from you? Are people retracting? And also if you could comment on week-to-week rentals. Do you see the week-to-week rentals that you normally guys get down there in Ocean City, New Jersey? Are they still moving along?
The weekly rentals and our local economy really depends on about 3 months from June, July, August. We make all of our income, all of the businesses, all of the vacation rental investment owners, these second property homeowners down here. If they're not making that income in pretty much that 10-week gap, then we could have a lot of stress put on those homeowners. The phone's ringing off the hook right now trying to cancel their rentals because they don't know when they're going to be allowed out of their homes. So right now they're thinking, whatever, I'll just cancel. And then if we're allowed back out, I'll just rebook a home at that point.
Right. So you are seeing some cancellations down there then, or people are trying to cancel anyway. That's
Correct.
Pretty interesting. Now, I know when I ran into you a few weeks ago, we had an interesting conversation of the last time you saw us, instead of people doing big, extravagant overseas trips, they were actually staying closer to home. Do you see that happening again? And if you could go explain a little bit about that, like what we were discussing.
Yeah, so in 2008, we actually saw a boom in our rental market, which is Saturday to Saturday. Again, from June to the end of August, early September, pretty much follows the school schedule. And what we found was instead of having lavish overseas vacations, and in this time, you're going to see people maybe being averse to getting on an airplane or spending money. A lot of people hop in the car where they think it's safe and cheap, and all the money's pretty much spent in the home rental for the week. And you're looking at 30, 40, 50% of what it might cost to do that big vacation they had planned.
Right. So yeah.
So we are actually hoping, depending on when we're allowed back out of the house, we should see, somebody mentioned on here earlier, a boom in our tourism market. And that's what we're hoping for. A lot of very late rental bookings, but actually booking us out and flocking to town. Now, right now, actually talking to people that own property here, and this is funny to see, in a time like this, we have Pennsylvania going lockdown, and a lot of the homeowners are now here riding this whole storm out in their second homes. So they kind of they're seeking shelter in their asset down here in the shore.
Yeah, I guess that's the advantage of having a shore house, or a second home anyway. You have somewhere to flock to. With that being said, you guys have a lot of spec builders down there, guys that have come up out of the ground with you guys got some crazy developments down there. We looked at a few houses that were insane. Do you see that market continuing? Those guys have such a refined business, and I know you represent a lot of them. What's your feeling on those guys and what their path takes them down during this market?
In this current market, I see any struggling homes, tear downs, homes that need a lot of work. They're not going to move right now in our market down here. Turnkey, new construction, I think, although it's kind of quiet right now because people just can't get out of the house to take a look at these homes. Once we're allowed out, what I'm thinking is you're going to see pent-up demand with still low inventory. And all those nice homes, the new constructions, they're all going to sell. People are going to come down and use them for the summer, buy them, rent them for the summer. Or if it's not that soon, they'll probably buy them in the fall and they'll be ready and geared up for the following summer 2021.
Right.
But the investors, the developers themselves, one of Ocean City's biggest, possibly the biggest developer, has put all of his current contracts to buy teardowns on hold or pulled out. And he's walked away from, if someone wants to go after his deposit, he's willing to walk away from it.
Wow, that's a pretty intense move. I mean, if you're saying he's the biggest developer, I can imagine he has 6 figures plus out on deposits, maybe close to 7 figures. So that's pretty crazy.
And he probably has other guys that were speculators that are following his lead too.
Well, and you got all that soft costs and everything else that it's not just a deposit that I don't think people realize that they lose. It's soft costs too, architects and everything else,
Yeah, and vendors you'd be using for projects.
Yeah, Ryan, what about people looking for a second home? Do you think this is the time to come in and scoop up a second home at a discounted price, or you think we have to wait a year and see what kind of fallout comes by?
I think to answer that question, honestly, you have to see how soon we're allowed out of this and how quickly the economy stabilizes and people are okay with, okay, I'm not going to lose my job. I still can afford that second home that I was thinking about buying. And if it's June, remember they can't settle until maybe July 1st, but more likely middle of July. And then how much summer are they going to get anyway? So it's really critical for us, unfortunately. Right now is our big time to be selling homes and everyone's in by the summer. So it'll be interesting to see when everyone's recovered and starts coming back down here again. I do think most of our homeowners down here are very financially stable. Something like this isn't going to bother them too much.
Right.
A lot of them own $1 million, $2 million home down here at the shore. They use it for 1 month and that's it. They don't rent it. It's just something that they come to and they use for a few weeks or a month. Others that I think will be harder hit by this are like some of the clients. I would say probably about half of my clients, they're looking to make a purchase. They want it to be an area that they like to use themselves, but they're also relying on that rental income to offset their mortgage payment. So, for example, I just had one close about 3 weeks ago. And with everything that was starting to go on, he was getting real nervous and said, you know what, you got a really great purchase price. It's new construction. It's going to rent. But someone like him, he's like, hey, I just barely had enough to get the down payment. I was really banking on that $40,000 of income to pay for the $600,000 house. So if that income doesn't come in, you might have an influx of motivated sellers, probably in the 400 to $1 million price point, and there'll be condos, rental properties.
Right.
And you might be able to get a little bit of a discount. But the one thing that we do have is extremely low inventory. And unless those type sellers start flooding the market over the next month or two, we're going to come back into this with still extremely low inventory and pent-up demand.
Right. I don't know if Jason's going to let us go much longer, but I don't know how often you get out of Ocean City, New Jersey, and shoot up to Atlantic City or over to Wildwood. Do you see those markets dipping a little bit, or it's a little bit softer, maybe with your buyers, they're in the $200,000 to $300,000 price range, and it's a second home and same type of thing. Do you see a little more dip in those types of markets? Because I know Atlantic City was just starting to make a bit of a resurgence on the single family market. I'd be interested to hear what you have to say.
Yeah, both of those markets, actually, it's interesting you brought that up. I've actually been focusing a lot of my attention into buyers looking into some markets like that. People right now are looking for cash flow properties. Investors are looking for something that's going to pay them back. Whereas in Ocean City, you kind of have to rely on the appreciation of the home as well. It might just barely cover itself. It might cash flow a little bit. It might cost you $5,000 a year to own. But down the line, 10, 20, 30 years from now, you're going to get what you paid for it, all of your rental income, and then add another 20, 30% to that. That's what you're hoping for.
Right.
Now in Wildwood, I actually have 2 contracts that just went through in Wildwood. And I really don't do too much business down there. So it's interesting. A lot of my current clients are actually active in Wildwood, and Ocean City is pretty much asleep. I do see those markets probably getting hit harder. There's probably a lot more opportunity, mainly because there's less demand to buy into that market, and they have, comparatively to Ocean City or Stone Harbor or Avalon, they have a little bit more inventory.
Right. Well, we really appreciate it. I think Ian Walsh is up next. Those that want to get a hold of Ryan, Jason's going to be sending everybody out Ryan's contact info, and for everybody that was a speaker on here. Yep. If you haven't been to Ocean City, New Jersey, I'll vouch for it. It's an amazing place, minus the no alcohol. Bring your own beer, but it really is an amazing place for your families. Thanks, Ryan.
Thank you.
Hey, Ryan, I appreciate it.
Thank you.
Ian, I'm throwing you up here in a sec.
I'm already up here.
Hold on one sec. I got to unmute you. There we go. All right, so Ian's going to hop on with his HMB background for about 10 minutes, and then we.
Why am I the only guy on this? How do you not have that background?
I don't know. I mean, you're like cut in half. Like you're like.
The only thing important is this and that behind me. I'm not my stupid face. Yeah.
Okay. Okay. All right. So I got to unmute Chris. Chris, are you unmuted? Because Chris is going to chat. So, all right, we're going to hop on with Ian for a little bit. Ian is our partner that's, 5-6 years? 5 or 6
and a half years, man.
I should have said 6 or 7 years. Okay. 6 or 7 years. As everyone knows, Chris and I lend, through HMB in Maryland, Virginia, and DC, and Ian and also his brother run everything in Philadelphia, or Pennsylvania, New Jersey, and Delaware. There seems to be a mix of kind of both markets, and we were pretty heavy in the DMV area locally. So it's good that we had a bunch of other speakers in some of these other areas as well. So Ian's going to hop on for a few minutes, and then after that, maybe like 10 minutes, him and Chris. And then after that, raise your hand if you have any questions. Start raising your hands now, and I'm going to go through them one by one and ask any questions. And if you have a question for a specific speaker, as long as they're still on, and most of them are, I'll unmute them as well. But raise your hand, and then we'll unmute you, and you can ask your question. Chris, you're up. Hold on. I got to unmute Chris. Sorry. Forgot he was muted. All right, Chris, go ahead.
Here we go. There we are. Okay, cool. Ian, how's it coming over there? How you making out?
It's good, man. Nothing's changed for me. I'm always stuck in my pilot seat at my house. That's how I do it.
Yeah, so we've been hearing some interesting stuff about what is and what is not shut down in Pennsylvania. Mm-hmm. We haven't gotten so much detail on Jersey yet. Can you give us a rundown of that? It's kind of strange because some of real estate has been considered an essential business, and aspects of it are not. Do you know the details on that?
Yeah, so they put it out. They like blanket statement in. They're like, you just came out one night. They're like, everything's shut down. It's over. Game over. Like all businesses closed. And they're like, here's the list. And then the list was kind of like some of it's clear, some of it's not. Some of it they definitely didn't think through because they didn't think about the guy. You know, they're like, okay, anything that's not food or medical related is closed. Well, then it's like, well, what about the guy that has to make the metal for the medical related thing, or supply the piece of this for the food delivery guy? Is that business? You know, so what I've noticed is that like your retail stores and stuff, like I think GameStop was recently fined or had their business license removed because they said, we're not shutting down in the face of this. And then they were like, all right, cool, your business license is gone. So I think like big stores and big places like that are probably going to get themselves in trouble if they like defy it in that capacity, but there's no way to enforce it in terms of like most other non-retail, like physical places. I think it's just a way of trying to project the severity of like, stay the hell in your house and stay away from work. I don't see how they're not like hauling people off to jail. But people shouldn't be going into their cubicle, you know, type stuff. That shouldn't be happening.
Yeah, for sure. I definitely agree on that. Like we got a similar order here. I mean, they stopped short of calling it here, meaning in Maryland. They stopped short of calling it a shelter-in-place order. They just ordered the closure of all of the businesses except for the ones considered essential. And there was a lot of real estate-related stuff on the essential list. Like, I mean, obviously banks and stuff like that. Got to keep the banks moving. Even a non-bank lender, which is exactly what we were. Anything related to construction and all the different, you know, aspects of construction, the different kinds of vendors and all that. So it left a good amount of wiggle room for us to operate, you know?
Yeah, I mean, it's tightening every day up here. I guess we're tighter up here than you guys are down there with that stuff right now. It sounds like it. You know, they just announced in Philly that is the 27th. So in 2 days, all construction is to cease. All construction jobs in Philadelphia cease. So that was a specific order that they put out like yesterday. So New York, New Jersey, and Pennsylvania seem to be a hotbed for the virus, and then therefore like seems to be leading the charge between them and like California of like the lockdown portion of it.
Ian, is that Philly or all Pennsylvania for
Philly
construction?
right now? Philly.
Yeah, because
right
I mean
now,
that's an issue. If that happens, real estate investing is in trouble short term, because obviously you can't get permits, you can't do construction, you can't do everything. Things are on hold.
Permits are already been on hold for sure.
Gotcha.
Yeah, a lot of people are going to feel that, you know, like the contractors who need to get up and go to work and make their $150 a day. And I mean, obviously the owner of the property, I mean, just all kinds of people, agents, you know, lenders, like.
Yeah, right now up here, I mean, I'm sure down there too. You know, the thing that I've noticed is that like the first few days of this thing was like a vacation for everybody. You know, they're like, oh, what are you doing with your time? I'm gonna spend some time with my family. And then it's like, oh shit, I'm not making any money. And I think within like 2 to 3 weeks, I know they passed that stimulus package today, which the market just swallowed in about 2 seconds, going into the close. You know, $1,200 an adult, I don't know how that's going to prolong the economy, but unless the stimulus is really impacting in a very short-term future, that vacation mode is going to turn to anger pretty quickly when people don't have money. When people don't have money and they've been trapped in their house, like, it's not a good look. So 2 to 3 weeks from now could be a little bit messy.
Yeah, that's interesting. So switching over to the, you know, more positive side of things.
Sorry, yeah, I'm like Debbie Downer. Yeah, go ahead.
No. It's the reality of the situation we're in. So we've been talking about, with some of the investors on the call, we've been talking about the potential opportunities that are going to come out of this. And also internally, obviously the HMB team, we've been talking about lending opportunities that are existing now and here into the near future. What kind of stuff do you think is going to be, from the lending perspective, since that's what we get up and do every day, the doable deals, the smart deals, like what's our next 90 days look like in your opinion?
I mean, right now I can tell you it's hitting hard. I mean, Jay, you know it too, seeing this stuff coming in. Like the question I'm getting all day long, and I'm just like literally trying, like, we are in business, like we are lending. You know, that is like the number one thing, because all of our competitors' doors got locked shut tight with Wall Street money disappearing overnight. And everybody around here is gone. And so I'm literally the email I'm answering all day long is, are you in business? So the short term we were built for this. Our company was designed to not take the short term money, not play the price wars. And it's harder when you're in an upswing the way it was for us. It was harder for us. But at this moment is when we thrive. And I don't mean thrive because I don't like to take advantage of other people's situations. I'm definitely not doing that. All we're going to end up doing is being in a position where stronger borrowers that were getting like 8-1 money, that's disappeared, and that's going to go away, and they're going to come back to us. And the only opportunity that we really get is we get to lend to stronger borrowers. Newbies are kind of disappearing. Like, I've already seen it in the last week. Jay, I know you've seen it too. It's just, newbies, honestly, and this is not a time for you to be in the market. This is a time for you to study or take a class or something, because you get crushed in this kind of, we haven't even seen the volatility of comps in the next 90 days that are going to change and stuff like that. But from a lending perspective, I have literally had more inquiries probably in the last 3 days than I've gotten even in the height. So probably about matching the height of like our lending output. It's right back where it was, and it's increasing due to the fallout from other lenders.
Yeah, for sure. I mean, in our position, obviously we have to be cautious moving forward. Like you were saying, comps changing, could be seeing decreased values. So we have to be conservative in our lending. But yeah, I mean, our niche, the people who stayed private capital, stayed lean as a company, stayed conservative risk-wise, we should come out okay. I mean, it's going to be tight. It's going to be tight. There's no doubt about it. But yeah, in some ways we were designed for the stress test. So yeah, I mean, we're fortunate there. And that's not to say we're not going to have any headaches, because obviously we are. We have outstanding loans with construction projects being illegal.
Yeah, it's just about how much pain do you have to suffer. Everybody's going to suffer pain. It's about how much.
Yeah, totally, 100%. Cool. Yeah, Jay, anything you wanted to cover while we had Ian on here?
Yeah, I'm just kind of thinking through the next weeks or months and future, and not just us as our company, but just what investors are going to do if, because that's different than here. Like, it's pretty much business as usual down here. It is. Things are open. Things are slower. Title companies are in business. You can go buy and sell a property today and get it on record and do business. It seems from talking to Caitlin and Ryan and now you that, stuff, it's hard to conduct business. Like, if you sold, Ian, if you had a property and you sold it to me for $100,000 off market, could I go get title insurance and do a closing today and buy it?
So all I've gotten back from there are some title companies closing. I don't know if those was title already in on some of our transactions. I'm not sure. I haven't put since Monday. I haven't put a new deal that needed new required title in motion. So a lot of title companies are going, we're still in business. We're doing this. And then I'm like, well, how are you recording this, or what's your policy for that? Or how are you, how are people searching this down the records down at City Hall and so forth? So my answer is, I'm not sure. I could answer that question probably a lot better Monday or Tuesday in our location after a couple more deals pop through. But everything that we've had now has been like title already in motion or it's ready to go. So I'm not sure.
And keep in mind, most of those counties up there are doing everything. They can pull abstracts and do stuff electronically. We've already double checked that and record electronically. But I guess the point is if you're not allowed to leave your house and you're kind of stuck in places, then can it get done? I mean, closing real estate industries is a big issue. It affects a lot of stuff. So I'm gonna do some more due diligence on that as well. And
I guess the virus, right? It's either gonna one of two things are gonna happen. It's either you guys are about to experience what we're experiencing because it's going to spread down your way, right? Or it's going to go the other way. And if the quarantine's working, you guys will never experience what we're experiencing up here. So I guess the answer is, if it continues to spread, which I think the trajectory is still just like through the roof, you guys will be soon feeling it. But I don't know, Jay, I would definitely say it's not like a booming month or anything, but it's like things are still happening. People are finding a way to get it done. Like, deals are being done. The retail end is dead stopped. I've talked to 3 big brokers up here and Mike McCann yesterday. Everybody's deadlocked. I mean, it's like 20% tops and it's probably the 3 biggest brokers and Mike and McCann up here. So like 20% tops is what their closings are right now. So that is locked down.
Yeah. But I'm saying because the unknown thing is can you close a real estate transaction? Like, if I had a closing today, can I go to a title company, or can they send me the information and can I close and get it on record?
So far up here, yes. I mean, we had 3 closings today, so.
Well, that's true.
Or 2.
Okay. Yeah. So, I mean, then it is, but then for the most part, business is getting conducted. Closings can be conducted if their offices say practice. I'm just looking at comments from Caitlin real quick. Okay. Fair enough. All right. Well, I appreciate it. Maybe stay on the horn for a second. If anyone has a question, we're wrapping everything up. raise your hand now. Hey, whoever, I'm a host, so I can't see how to raise your hand. Can one of you guys chime in of what to do in order to raise your hand? Like, I think you go to, like, you.
Hold on, I used to know this.
We have our research assistant, Terry Royce. I'm sure he'll figure it out.
I don't know.
We've done this before, and
I think you might hover over your name instead of pushing rename. Is it right there?
Unmute Ian.
Oh, does Ian know?
He's still muted.
I'm mute myself. I'm here. I'm pretty sure if you click participants, can everybody see the participants? And then you pull a box up and then you hit raise hand. I don't know, raise my hand or raise my hand.
Oh, there we go. Oh, there we go. I saw your hand. So if anyone has any questions, now's the time to raise your hand. Say that one more time, Ian, how to do it.
You go down to participants and your screen. I don't know how to do it from mobile, but if you're on desktop, go down to participants, press on that, box will pop up, and then there's a raise hand button. You'll be able to see. So, but either way, it was really interesting to see what everybody had to say, all from different points of view from real estate, honestly, from title all the way down to lenders to brokers, and even in different jurisdictions. That's like someone's saying the more button. I don't know if there's a more button on your screen, but it's just really interesting to see everybody in different jurisdictions, what they're dealing with, and how people, the more important part is, like, Americans, I guess we're just resilient, the country as a whole. They're like, okay, well, there's a roadblock here. Like, let's knock it down, do something about it. I think that's what's awesome about what we're doing and still getting deals done.
Yeah. And I mean, I've seen a lot of, we stream this to Facebook Live as well. So I was looking at some of those comments and just people and, investors participating. And I think a lot of people are still very proactive. That's a big word, optimistic. Again, like, we could be negative Nellies on this thing and go home and feel sorry for ourselves, or we could be proactive. And I think the people that are going to be proactive and optimistic, I think there's some good times. And yeah, maybe the real estate market dips a ton in the next few months. That's very possible, especially if, real estate transactions cannot get conducted. But it seems like everyone's optimistic about this and wants to continue to move forward. And I think that there's really going to be some good opportunities out there. And, if you have an opportunity, I saw some chats that someone says, well, where would I get started if I'm newer? It's, obviously learn everything you can, network with everyone you can, create your sphere with everyone you can, and go look for opportunities and figure out the best one. If you want to buy one property right now, we'll go try to get 10 of them and cherry pick the best one, because that's what it's about. Everyone's going to be doing that. Everyone's going to be doing that. Your lenders are going to be doing that. If someone's a wholesaler, they're going to hold off and try to sell it to the best one. And the good, hopefully, this knocks out a lot of competition, and you will see what happens.
Yeah, I definitely agree that it's a smart move. And I've heard a couple people say this too, like, there are other things that you can do in business besides transactions, right? So, and that could be education, whether you're a newer type of investor or just something you're trying to learn, like self-storage, for example. Maybe you're a veteran investor but don't know anything about that. I mean, it's a good opportunity to take a step back, be smart, be safe, stay out of the public, and improve yourself so that you might have another skill set when this thing shakes out. And other, I think Mike Schock or somebody mentioned it before, like other, behind the scenes operational type of stuff that you can work on, whether that's like getting your database together right, or writing out some new content. There's a lot of things that you can do that aren't necessarily transactions. So if we're going to pivot a little bit and focus on that for a period of time, then put our foot back on the gas when it's back to business as usual, right? I think it's a smart way to handle this whole situation.
Yeah, I think. Oh, sorry. Go ahead.
No, go ahead.
Jay. So Mike McCann, we were talking with him yesterday on that thing, and he's been through like 6 cycles like this, and he was like, he said if you combine 2 of them, this is about the experience we're having. It was like 9/11 and something in the 80s. I don't remember what it was, but he said, he's like, look, it could be worse. He's like, there could be a bomb, an atomic bomb being dropped on you, like World War II, or you could be, storming the shores of Normandy. Like, this is not the end of the world, what we're facing right now. it's just adapting to it, and he's doing exactly what you just said, Chris. I don't know if you actually listened to what we were doing yesterday, but it's exactly what you just said. He's like, I'm reinvesting in myself, my business, and the people around me. He's like, this is the time to do it, and this passes. It could be worse, and that's just his mentality, and I think it's a really good way to look at it. Is like, this could definitely be worse.
Totally agree.
And I mean, listen, the real estate investors that are the most effective and the best ones are the ones that this is their livelihood and hobby anyways. Like, this is what they want to do. You know, obviously you take care of yourself and friends and family and things like that. But after that, it's like, we love doing this, and that's why we're active and about it. And we want to make the most out of it. So yeah, I mean, I think we're all kind of in agreements that, you know, who knows who, you know, like, so let's say you do buy a property today for $100,000 and it goes down a significant amount, you know, then you pick back up and, you know, you make a wise, smart decision on your next asset, on your next deal. And you just do whatever you can to kind of, you know, keep things moving. And, you know, I'm watching CNBC on a screen over here right now. And like,
is there news? I mean, something hit the market like 15 minutes ago. Is there news?
Well, the Dow's up a ton, and like, it's just funky because every day, you know, down, up, down, up, down, up. Like, you can't just, you freak yourself out, you know. All of a sudden, you know, something's down by 10% and it's like the sky's falling. And all of a sudden, you know, that stock rate, you know, rises 10% back to where it was. The next day it's like, oh, we're at a great healthy market right now. Like, it's just, there's a lot of funkiness, inconsistencies. You know, do your own due diligence, do, you know, what you believe is the best thing. And, you know, we'll see. And I also, another big trend that a lot of people were talking about was, you know, they're not on the sidelines. They're very actively involved, but at the same time, they're going to pick the best deals that they can get their hands on. And, you know, I think it's important.
Hey, Jay, somebody in the chat was Roger Bremer was asking how to get everybody's information. I know you said you're going to post it somewhere.
Well, everyone, most people registered through the meetup link. We had a few hundred people registered through the meetup link. So I'll probably just blast it out to that list since everyone's on that meetup list for the most part. We'll start.
And if not, you go back to that meetup page and you can find, we're all on Facebook. I'm pretty sure everybody that was today's on Facebook. You can track us down.
Yeah, but I'll get that. I was going to do like I was going to have that done before we got started, but I didn't. But yeah, I'll take care of that tomorrow and make sure everyone has everyone's contact information. And
what, there's still quite a bit of people on here, so I think it'd be beneficial if I can ask everybody a question. I'm going to start with Terry Royce. What do you think your number one takeaway was after hearing everybody?
I mean, I don't know if it was anything groundbreaking, just hearing, you know, that a lot of the people that are in this business and have been in it, like, you know, it just reinforces the necessity to be prepared. I think I talked about it with Jay a little bit yesterday. You know, making sure you have capital, making sure you have different contacts. I think you saw a couple people in the chat over the course of the last 2 hours be like, oh, I had one lender and they're not lending right now. And it's always useful to just have a lot of different resources. I mean, even Jason talks about it a lot. You know, even though their niche is hard money loans, but there's a time and a place for different lenders, different types of loans, different funding sources. And I think you're going to see a lot of people who have one resource scramble, and it's going to create opportunity for those who have better resources, whether it be cash, different lenders, whatever it may be.
Yeah, no, that's a very valid point that, you know, well, you don't need to be the chameleon. You need somebody in your toolbox that's able to get you through a situation, which is a really interesting point. I see.
I think a lot of people just freeze too. Like when people are like, oh, well, they're lenders. It's like, well, what do I do? They don't just go into like, hey, I'm just going to hammer the phones and get this done. Like people just freeze up instead of like going into action.
Yeah. And I think me and you talked about it before we jumped on this call was, you know, if we lost it all, this market just flipped and we lost it all, what would we do? We would get back right on the phone and just pound the phone, get right back to our core essential business, and grind it out. And I think that's the advantage with everybody kind of being on pause, just hearing what Ian Walsh is saying. And my in-laws live up in Montgomery County up there and everything's on a freeze is like, now's a great time just to hit the reset button. I know I've said it a ton of times, but I've never seen a time like this where you can literally sit down, have some time to yourself, and go, and there's not a bunch of noise around you. It's very easy to ignore this pandemic thing and concentrate on yourself. Did see a couple other questions in here, Jay. Leanne Santos said her takeaway was, we don't stop your momentum, whatever that looks like. That's a very valid point. I know this one came up a few times. I don't know if anyone has a good comment on this from Andrew J. What would cause a lender to freeze HELOCs? I think you would have, me personally, I think you have to see a massive crash in the market. I think Jimmy Harris hit it on the head. It's not a financial crisis. I mean, Jay, do you have any?
Yeah, I mean, I remember when that happened in the 2008 financial crisis, and it's for very different reasons. Like, that was a banking system problem, in addition to like all kinds of other, you know, financial markets and everything else, and all the collateralized debt and all the stuff that brought so many things down. But I mean, as far as from what anyone can tell, we don't have a banking system problem now. Are banks going to get conservative because there might be a dip in the real estate market? Of course, especially commercial. Freezing HELOCs? I don't know. Different circumstances, and probably too soon to say.
Yeah, I think we need a lot more fallout. And I think, you know, everybody can sit here and speculate and we can all say whatever, but that type of stuff, that's 12 to 18 months from now when there's realized losses from people not making rent payments and foreclosures happening, or people not being able to pay their mortgage payment from this loss of work, and they've exhausted all the forgiveness that's been given to them, you know. So if the forgiveness that's been given so far is what they say it is, and it's not going to extend, our timeline's 12 to 18, let's just call it 12 to 24 months is when you start to see this type of fallout that everybody's sweating. So if anybody has any other questions, stick them up in the chat. And if not, I think, Jay, got anything else?
It's a good 3-hour run, fellas.
Yeah, it was a solid one.
Gentlemen.
No, I think we're good. You know, maybe we'll do a follow-up to this in the upcoming weeks. You know, I know personally I'm doing a lot of Facebook Lives with real estate professionals locally, just to help spread the word after I talk to them. And if I feel like there's good insight to our audience, I think that's important. You know, I've done a few already. Chris has done a few, and we're going to continue to do some because, you know, as we're getting stuff, I mean, like we talked about when we started, we're on the front lines of this stuff. And I think a lot of people, you know, need to hear some of this information, good or bad, because, you know, we see it. I mean, we closed the deal today in DC. We have a deal closing tomorrow in Maryland. Ian closed the deal, you know, in a few deals in Philly this week. So we're seeing it. We're talking to title companies. We're talking to real estate agents. We're talking to wholesalers, buyers, sellers, everybody. So like, and because we're kind of in the lending industry and we're doing, you know, a good amount of business, you know, we're seeing a lot more transactions than I think the general investors. So, so happy to obviously reach out. James, I'll put my number right here for you on that keypad. But yeah, and you know, we'll continue to share whatever info we have. And you know, the thing is a lot of this stuff's going to be changing day to day. Like Ian said in Walsh in Philly, like they shut down stuff. If we get shut down, and you know, it doesn't seem like they want to do that. That seems like that's going to be their last resort. I mean, after Hogan's conference today, you know, schools got pushed back until the end of April and stuff like that. But I guess we'll see. I mean, as things are getting affected, and listen, if you know something gets shut down, you know, God forbid, like title insurers do stop, just real estate's on hold. Well, you know, we reset even more. We learn more. We educate ourselves with more. We're proactive. Maybe we put together a massive marketing campaign that we don't necessarily put out. Maybe everyone preps a crazy direct mail campaign, but they don't hit it. You know, they don't push send on it until everything's back to normal. And then guess what? You're the top person. So whenever there's potential, you know, downfall, there's potential a good upside in the future as well. So I guess we should just leave everybody saying, be proactive, be optimistic, and obviously stay safe and stay healthy.
All right, everybody.
Thanks, guys. Thanks, everyone, for hopping on.
Yeah.
Thanks, everyone.